Good morning, everybody. Welcome back to another episode of the Market Open. We've got so many things going on right now as we get into the final trading week, or the basically final trading week of April, as we are now essentially 1 month into Q2. Lots of stuff happening, and it's creating a lot of volatility right now in the pre-markets, which is why Nvidia is down about 4%. The S&P 500 is down about 1%. And you've got a variety of other things currently going on right now that are pretty crazy. Again, good morning to everybody. This is the quick little breakdown of what's happening right now in the pre-markets. And then we got a lot of stuff to get into. The Dixie US dollar at its lowest level in 3 years, 98.14. That means people are selling off the United States dollar. Nvidia is down 3% because Huawei is now filling in the gap created after the H20 chip got banned in China. We talked a little bit about that last night, that if Nvidia can't procure the chip for Chinese tech companies, Huawei is not that far behind. So a news article came out today that Huawei is now beginning to fill in that demand. Nvidia drops 3%. S&P 500 down 1.2%. The 10-year and 30-year treasuries are up again. Both of them almost 2% on the day, and it's only 9 a.m. in the morning, indicating that people are selling bonds when they should be buying them because stocks are down. That's when you buy bonds. That's not happening. People are selling bonds. Japan says they can't concede to everything the U.S. wants on trade. That's not good for trade negotiations. Gold hit a new all-time high of $3,400 an ounce. So we know what people are doing. If they're selling stocks, they're selling bonds, they're going into gold. And then China put out a warning saying, hey, any country that wants to accept a United States trade negotiation, think twice before you do that, because we're not going to give you what you want if you accept everything that the United States wants. So wonderful morning. Wonderful morning. Kevin says this sounds bad. Well, it's not necessarily sounding the best. I mean, it is getting so bad right now that Jeremy Siegel, our boy, went on CNBC today and he said, hey, I think the Fed needs to cut rates. Essentially what he did on August 5th, right? Let's get those emergency rate cuts. He made an argument today that I couldn't believe. He said it would be more independent if the Fed cuts rates, because it's the right thing to do. And so it wouldn't be seeming like they're bowing down to Trump. It would be like just a good thing for them to cut rates, which, you know, we already know why the Fed is not cutting rates right now. So regardless of whether you think it's a good or bad thing, the idea that it would be more independent of them to basically reverse their decision before May, it seems like that would be more of them just acquiescing to Trump, which is fine. I mean, the Fed can do that if they want, but it's getting to the point where Siegel's calling for an emergency rate cut. And that is creating a lot of volatility right now in the pre-markets as well. We got a lot of things to go through. Again, thank you everybody for being here. Real quick in the pre-markets, Nvidia down about 3%. Meta down 2%, 492. I believe that's a new low for 2025. Tesla, didn't even see this one, down 4%. We do have Tesla earnings tomorrow. I'll be live after hours. We'll have a lot to talk about when it comes to Tesla, so we'll be going into that. Palantir is down about 2%. AMD is down 2.3%. Weeble's down 4%. Dow Jones down about 1% on the day. Google down 1.2%. Uber's down 1.5%. Hertz is down 10%. Why? Because Morgan Stanley came out and said, hey, we think Hertz is worth $2. We don't care if Bill Ackman bought 20 million shares. So Hertz right here getting hit by the reality of the fact that, you know, maybe they're not worth $9. So Bill Ackman got his pump. The question is if he's going to be able to keep that pump in long term. MicroStrategy bought another 5,000 Bitcoin. Bitcoin itself, again, we'll talk more about it later, but it has been performing not as bad as the NASDAQ, 87,124. The NASDAQ is down about 2% right here. Bitcoin is up, which is pretty damn incredible, seeing Bitcoin go the opposite of the NASDAQ. NASDAQ right here down about 1.3%, and the S&P 500 right here is down about 1% on the day. Lots of stories, lots of stuff to get into. Before we get into all that, we got Goolsbee on CNBC. This is one of the Fed officials. Let's see what he has to say and if we can get anything meaningful from him in the context of what's going on with markets, and then we'll keep going from there. And we'll try to make sense of what's happening. I do think it's going to be a very, very volatile market, not only for today, but going into this week. Again, thank you everybody for being here. Hopefully everyone had a great Easter weekend, and now we're getting back into the markets.
Been a little weaker, bonds a little weaker as well. Does it matter that the president is talking about the potential to terminate the Fed chair?
Look, I'm not going to get into the discussion on that. I know the secretary, I agree with the Secretary of the Treasury when he said Fed independence is a jewel box that we don't want to mess with. All economists, I've been at the Fed for a little over 2 years. Before I was ever at the Fed, I will tell you, economists are basically unanimous that Fed independence is critically important. And to see why, just look at the countries where they don't have Fed independence. Inflation is higher, unemployment is higher, growth is worse. So I think there's a lot of back and forth that is outside the purview of what the Fed, in my opinion, should be doing is following its legal mandate, stabilize prices, maximize employment, and it is the conditions that determine what Fed action are, not anything else.
Mr. President, the recent numbers that if I just were to immediately say, wow, this number matters, it looks to me like inflation is less of a worry right now than a slowdown. Tariffs can cause both. I'm more worried about tariffs causing uncertainty, which becomes self-fulfilling with corporations, and that we really get a possibility of a slowdown. I don't know about a recession. And then on the inflation side, it just seems like a one-shot deal unless we get into a tit for tat. It's the second derivative. It's not like the inflation we had 3 years ago. It's not the same. So I think the risks are not equal now for the dual mandate. And that's why I think you believe this in your heart. It'd be nice to preempt the slowdown because these last inflation numbers we got were pretty tame.
I don't know if I didn't have my coffee or what happened. But most of what you said, Joe, I totally agreed with.
That's what I mean.
I don't know what's happening to me.
Because you are MAGA Austin now.
So look, I agree that if you get into the difficult part of a scenario for a central bank is if both sides of the mandate start going wrong at the same time.
Right.
If
but I think
the inflation side does not start going wrong, then
what's more likely right now? Seems like the slowdown is a bigger risk to me.
It might be, but then it's also about magnitude. So if you started to see inflation going wrong and unemployment going wrong, let's say, A, you would want to know how long is it going to last, and B, you would want to know, well, how much is it getting out of whack on one versus the other? If it was a theoretically pure tariff, let's call it, one-time increase in the price, no retaliation, no follow-up increases, very little in the way of supply chain disruption, then I agree with you. That's a transitory inflation shock. And I've been saying for a long time, if you could just keep it kind of in its lane, most of the U.S. economy is domestically driven, is not dependent on tariffs. I think our uncertainties at this moment and why for me personally, when I hear Jeremy saying preemptive cuts, we're getting announced retaliation. We're talking about revisiting the tariffs in 90 days, and we don't know what the impact on the supply chain is going to be. So I think we want to be a little more the steady hand and trying to figure out the through line before we're jumping to it.
That's Goolsbee's argument. So for everyone saying the Fed needs to cut right now, which, look, I agree with. I do think it would be nice to have the Fed cut. However, like just human to human, I don't think I can say that's a bad argument. Goolsbee right there is admitting that he thinks tariffs inflation could be transitory. However, he's also admitting that the types of tariffs we're seeing by Trump are so unprecedented that it would make more sense to just wait and see what the impact of it is before they end up cutting. Now, look, if that risks a recession and I was the chair of the Fed, I would probably cut because obviously I don't want to have a recession. You'll deal with the tariff inflation later. That would be my personal choice. I would cut because I don't want to risk a recession. But this is how the Fed is thinking about it in the context of their battle with inflation. And to them, again, it goes back to what we've been saying for the past couple of weeks. They don't feel they're going to get blamed for this. They're going to get to blame the guy who started all this tariff inflation, or at least the perception of it, which is Trump. And so that is why Trump wants to fire him so badly, because Trump thinks it's the right move to cut, but he's not cutting simply because of the inflation worries. Even though Goolsbee's argument is, hey, there might be some legitimate inflation worries, and if we cut too soon, that's going to be a bad thing for inflation. Although I do agree that a slowdown in growth is way more important right now than inflation.
To action.
Austin, you point out that your district is the one that is the manufacturing hub of the United States. You feel these things more deeply. Do you think that the tariffs can do what the president has laid out as a goal, which is to reinvigorate manufacturing, particularly in the Midwest? Do you see that happening?
That's a longer run effort, and I applaud the effort that if we're going to increase manufacturing, it partly depends how this negotiation chain with other countries is going to go. You saw the Secretary of the Treasury say that he thought, and when this period was over, it was going to reintroduce, he called it the golden age of global trade. If on the back end of this, we got new agreements and the productivity growth remained high, I think you could see a rebound of manufacturing for sure. In the short run.
Oh, sorry, go ahead.
Yeah, I was just going to give the example of steel, where we put in tariffs on steel, which you would think would be fostering the domestic production of steel. But you've seen a series of domestic steel producers actually start some layoffs because the demand is not there, because the tariffs are hurting their customers more than they're helping their.
And see right there, I think that's a good example by Goolsbee. He's in the Midwest, he's in Chicago, and he's seeing steel companies have to do layoffs because their demand is going down because of the tariffs, when in reality, they should be increasing manufacturing because the tariffs theoretically should be bringing back all this demand and jobs back to the United States. And when you have examples like that, particularly for Fed presidents that are in those locations, they start to question if the tariffs are going to reinvigorate the growth that the cut would be potentially presuming to be able to also increase. That would be a stimulatory effect. Or would it decrease the growth and then increase the inflation? And then if you have a cut, that also increases inflation, and you end up in what is known as stagflation. And from that perspective, I think that's where Goolsbee and the Fed is so scared right now to end up giving us that cut.
Cost side.
Austin, I wanted to ask you a separate question. You referenced Scott Bessent a couple of times now, once talking about the independence of the Fed, another in the context now of tariffs. But a different reference would be prior to President Trump's election, he talked about putting in place effectively a shadow Fed chair, or at least nominating somebody, naming somebody early, and that this idea that somehow the market would look through it. This was his proposal, not somebody else's. Of course, now he has to deal with Jay Powell every
He's
week.
kind of backed off it, right?
I know he's backed off of it, but he's the one who introduced it. And so the question, though, now is, given that the president is back to the idea of terminating the Fed chair, whether you think there's a possibility that you would nominate, or that he could nominate somebody early, and what do you think that does in terms of the way the bond market behaves?
It sounds like you're asking for political scenario analysis from a guy with an econ PhD.
No, it's not a political scenario.
No.
It's let's say there was somebody that was announced in the fall, and that person was sort of known to be dovish, if that's what the president wanted. Do you think that it's possible that the bond market or bond investors would, quote unquote, look through whoever is there in the interim to somehow get to the other side? That's what it's not a political question.
I would ask you know far more about what bondholders and investors' sentiment is than I do. I'm just down here trying to fulfill the dual mandate, voting on stabilizing prices and maximizing employment. I don't want to get into all the machinations that you're describing. Jay Powell is a Fed chair. I'm a strong supporter of the FOMC. As sitting at the table, I can tell you it's my opinion that is now the world's greatest deliberative body.
So, one just real quick follow-up, which is, how important is the Fed chair themselves to the conversations you have at that table? Meaning, if somebody walks in the door and is extremely dovish or is extremely hawkish, and they are running that meeting, that ultimately would be the outcome.
Well, I mean, it's a vote, but the chair is by far the most important person sitting around the table, and their opinion carries a lot of weight. I think that's been hard earned from Volcker forward. You've seen the chairs express their opinion and maintain credibility. So whoever is the Fed chair, I imagine, is going to be a strong name and somebody that will carry weight for sure.
Right.
All of this is coming as a result of a Wall Street Journal article that came out over the weekend. It was on Friday. And the article implied that Trump is getting ready to fire Jay Powell and he's already had conversations with who to replace him with. Now, the article warned that Besant was the person who dissented against Trump actually firing Jay Powell. However, a new article came out this morning saying that Trump is very, very likely to seriously consider the idea of cutting Jay Powell again. That's actually why the dollar is tanking right now, because of the article that came out this morning from BBG. And the idea is that Trump is exploring the option much more seriously. He's talking to lawyers. He's getting more into the weeds of the nitty gritty on how he would legally pull it off. Obviously, if that happens, the 10-year right here showing Trump how much they would hate for that to play out. The 30-year also showing Trump that they would not be fans of the Fed chair being fired. We might get rate cuts quicker, but at what cost, right? At what cost would it happen if we do end up getting those rate cuts? And I don't know. It's going to be hard to kind of determine what or how bad it would be. We will obviously see the market reaction, but as of now, the market in terms of the bond market and the dollar market are saying that they are not happy that would take place. S&P 500 right here down about 1.02% in the pre-markets. Again, Bitcoin acting like a little bit of a hedge right now at 87,000. It's down, but it's down very slightly. Last night it got to 87.8, almost at 88,000. Everything else, though, when it comes to big tech, getting demolished. Nvidia down 3%, Meta down 2%, Google down 2%, Tesla down 4%. They've got earnings tomorrow. That's going to be important. Google has earnings on Thursday. Tesla continuing to decline, down about 4.23%. Currently right now, TQQQ is down, SMH is down, all the semis are down because of Nvidia. I mean, it's just another one of those mornings where we take a leg down. Maybe that changes if Trump tweets something or if they kind of change their stance on J-POW, whatever it may be. But everything right now is pointing in the direction of not trusting the U.S. dollar, not trusting U.S. bonds, definitely not trusting U.S. stocks. And the only beneficiary from all of that, or one of the real beneficiaries, is freaking gold, which is at 3,400. So, I mean, gold has now performed above 30% year to date. It has been the hedge against everything, as it should be, right? Historically, this is the purpose of gold, but the fact that it's becoming this type of a hedge is something that's obviously very alarming to other people. Morgan Stanley came out today and said that Trump's tariffs are having COVID-level shockwaves throughout the entire system, and it's creating COVID-level uncertainty. They said right here, businesses are facing uncertainty not seen since the early days of COVID-19, driven by President Trump's unpredictable tariff policies. Analysts say this uncertainty is hurting earnings forecasts and making long-term planning difficult. While the U.S. is in a partial 90-day tariff pause with some countries, key levies like 10% universal tariffs and duties on steel, aluminum, and autos still remain. Tariffs on Chinese goods have jumped to 145%, with China retaliating at 125%. Now, despite the turmoil, Morgan Stanley expects the S&P 500 between 5,000 and 5,500 short term. So they're still relatively, I guess you could say, semi-bullish on the nature of the markets. They haven't said leave the markets yet. Bank of America officially has said you should start shorting the markets. But obviously the level of uncertainty is getting up there, and people are starting to realize this is aggressive. Can everything change with a tweet? Yes, I still believe everything can change with a tweet. However, based on what Trump tweeted yesterday, which was a doubling down on the tariffs even further, I don't think that tweet's coming. As much as I think people want to see that tweet, it doesn't seem like it's going to play out the way we want it to play out. Unless the bond market really starts screaming and you start seeing yields at 5-6%, which would be insanity. And then I think hopefully much before that, a tweet would come out. But as of now, it's getting pretty aggressive. We are also seeing the biggest rush from investment-grade bonds recently, more than 17 billion of outflows year to date, the most since March of 2020. That's also probably explaining why the broader credit markets are having some issues in terms of the 10-year and the 30-year, and why people are not that excited right now to be in the bond market. I mean, it's kind of obvious, right? If you're a bond investor, like the reason you buy a bond is because you want to get a better rate of return on a 10-year or a 30-year bond versus inflation. If you think tariffs are going to be extremely inflationary and we're not going to get any rate cuts anytime soon, for the time being, you go to something that is safer than stocks, crypto, and the credit markets, which is gold. And that's why I think we're seeing the momentum that gold is getting right now. In terms of the Nvidia news, this was the headline this morning. So Huawei is rolling out their new 910C AI chip in May as China seeks to reduce reliance on Nvidia and establish homegrown alternatives in light of tightening U.S. export controls. The Huawei 910C chip plus the 910B processor stack reportedly rivals the Nvidia H100. So not even the Nvidia H20, theoretically, if they can rival the Nvidia H100, that is obviously very good for China because the H100 is still an important chip, even though the GB200 is currently the next generation of that chip. But if they can replicate the H100, I mean, yeah, it makes sense for Nvidia to be down 3% right here. I've kind of come to the conclusion as an Nvidia investor that we're going to lose China. And I've kind of made peace with that. It is what it is. Like in a trade war that's as aggressive as the United States and China are having right now, the idea that Nvidia is going to be able to easily sell into China is like, it's just not likely. And so if that's the case, then we're going to lose 15% of revenues. The analysts are going to have to readjust for that. I don't think that breaks the Nvidia thesis at all, but it's definitely a hit to it. And the idea that this thing can rebound to 150 that easily, probably not. And I think every investor, if you're in Nvidia, you've got just, and same thing if you're in Micron, Dell. I mean, all these companies are going to get a hit if Nvidia can't sell to China. And it is what it is. We have to be ready to deal with that. So I'm curious at 9:30 how bad this open is. I mean, right now it's down 3.3%. Does it just tank further? Does the bottom fall out? Do we go back to 90 or do people step in at this range and take a stab at it? I guess we'll see in about 20 minutes, but Nvidia right here down about 3.3% along with all the semis getting hit pretty aggressively as well. Yeah, I mean, and no one fully knows if the Chinese numbers are correct about their chips. The whole point is just, forget even if China can replicate the chips. The point is we can't sell into China. So whether they can replicate it or not is irrelevant if Nvidia is just not going to get that revenue unless we get that indefinite ban not be a ban anymore. And if the trade war continues, then I think that ban is going to last for a while. Here's Siegel this morning talking about the necessity for a rate cut as well.
Long-term inflationary expectation that the Fed itself uses, that Chair Powell has talked about. They've used this for over 20 years, is now at 2%. So, you know, on that standpoint, I think there's a lot of it. And by the way,
so forget about the bond market. It's a week later. We're feeling good about things, and we should go ahead.
Well, the bond market is, I mean, you know, I think the bond market's being disturbed by a lot of things going on, you know, and things about the independence of the Fed and all sorts of other situations. And in fact, you know, I think the Dow would improve actually if Jay Powell actually lowered that rate. You know, another factor is that money and credit are just not growing fast enough. Over the last year, the M2 money supply has grown less than 4%. For a healthy economy, you need between 5 and 6% money growth. It's actually lower than it was 3 years ago. And the only way for the Fed to actually stimulate loan growth, to stimulate money growth back to a healthy level is by lowering those interest rates.
So you're concerned about the Fed's independence, because I got 2 points from you. One was that there are good economic reasons for Powell to lower rates. The second is that the threats to Fed independence are real and growing. So you're worried about the Fed independence, but you think he should cut rates.
Yeah, and let me say that, listen, let's face the facts. If he doesn't cut rates and we have a recession because of the tariffs, who is Trump going to blame? Trump is going to blame Powell.
Now, Trump's going to blame Powell. I don't know if that's going to work, guys. He can blame Powell all he wants. I think the broader public would blame Trump. Like, I don't think they're going to say this is a Fed recession. I just don't believe that. I don't think there's enough sympathy from the public around the Fed needing to cut versus hatred that the public has around the Trump tariffs. I think the blame is going to be put on Trump, even if Trump tries to put the blame on Powell.
And the Republican Congress is not all that friendly toward the Fed to begin with. Don't forget the whole
So you
Federal
basically
Reserve.
think he should cut rates to make sure he keeps the Fed independent. So listen to you, not Trump, but do this to make sure
I
that the Fed
actually think
independence
Fed
isn't threatened.
independence is enhanced, the probability, by him cutting rates right now.
You
And
think inflation, Jeremy, you think inflation is
doing what he wants.
You believe those recent prints on inflation?
The recent prints on long-term inflationary expectations are down 30 basis points since Fed took office in January.
So the real risk
that is exactly.
Yeah, the real risk is the economy. I agree with you.
Absolutely. The real risk right now is the economy. And those inflationary expectations into the long term that Powell said he's concerned about on the actual data is not present at the present. Because
tariffs can cause, I think it's more likely, unfortunately, I think it's more likely tariffs can cause a growth slowdown, and the inflation is sort of a one-shot deal because you don't get, unless it's a trade war with you keep tit for tat and because it's a one-shot deal. It's not the second derivative where inflation keeps the pace of increases keeps rising instead of just the first one. So
absolutely, yeah. And let's say, Joe, you believe in the poly market and the markets right now. They're saying nearly 60% chance of inflation. All Wall Street firms have raised their rate. So you have red flags there. You have inadequate money and loan supply growth. You have long-term inflationary expectations at the level the Fed wants. Why not? And by the way, if the economy, if things go well, we don't have a slowdown, don't have a recession, then the Fed goes back up. This idea that the Fed is like a battleship that, moves slowly, it goes in cycles of years and all that, is just not supported by evidence, not supported by theory. They could move back if need be, but right now, the data is flashing red for me to say lower those interest rates.
So obviously, Siegel, not a fan of the Fed keeping interest rates this high right now. Look, I'm on the side of the Fed should cut. I think it's obvious the Fed should cut. However, I also understand the Fed's argument that, hey, if tariff inflation is that aggressive, then we can't cut because there's going to be too much inflation. Now, if I was the Fed chair, I would cut regardless to try to starve off a recession from happening. And then, as Siegel says, if it really is that bad, you can raise rates again. That wouldn't be ideal, but that possibility does exist. However, the idea that the Fed would be more independent if they cut in May after Trump has been begging them to cut seems not as likely versus them sticking by the stance they've had, which they've been consistent with, to at least give them some credit for the past 2 months, that tariff inflation will be a reason why we probably shouldn't cut, given how aggressive it can become. Again, if the hard data starts to show some real signs of a slowdown, which, by the way, we haven't seen that yet. Job growth is still amazing when it comes to initial jobless claims, non-farm payrolls, CPI and PPI are good, but we haven't had business manufacturing or business confidence go down that dramatically. We've had consumer confidence come down, but retail sales were up last month. So it's not like consumer confidence is necessarily translating to retail sales being as degraded as people thought they would be. The hard data is still showing people are spending money and demand has not been fully destroyed yet, which is, I think, what the Fed is looking for. Now, granted, the counter argument to that is hey, the Fed should be cutting before they get that data because then it would be too late. So there's a lot of nuance to this, but I think sort of the fundamental argument here is that until the Fed feels that tariffs are not going to be as much of a threat to their inflation progress as they currently feel it is, they're not going to cut, whether you or I like it. And I feel like us pontificating and complaining about it is irrelevant because at the end of the day, there's one man who can control if the Fed is going to cut or not, and that's Trump. And all he has to do is walk back those 10% universal tariffs, in my opinion, to something like 5% or 2% or whatever it would be, maybe get rid of them. And that's what would give the Fed a lot more room to feel, all right, there's not going to be inflation if we cut. But Trump's not going to do that because he can't, right? He's negotiating right now. And he probably needs those in place in order to get deals. So that's why we're stuck with, rock in a hard place. And it's why Trump wants to get rid of J-POW. But if he does that, I mean, things could get substantially worse. So it's one of those things where we're going to have to just see this play out. And in the meantime, we might end up getting a little bit of pain in the stock market. Did you see the Pope Francis news? Yes. Rest in peace to the Pope. He did pass away, I believe, late last night. He passed away. So I saw that news in the morning when I woke up, but he did indeed pass away yesterday. That was surprising to me. I woke up, I saw a lot of different news headlines coming through all different angles, but I didn't expect to see the Pope. But he was pretty sick though. So it was getting to the point where I think a lot of people knew that his time was coming. But it ended up happening last night. So rest in peace to the Pope. Tom Lee, we got him on. Let's see if he's bullish at all about what's going on, and then we'll keep going from there.
Sort of stuck under 85,000 with gold going up every day. And it was either you or Pump that said Bitcoin usually follows a couple of months later, but has a much bigger move.
That was probably Pump.
Probably, yeah. He's pretty bullish.
Yes.
Have you noticed anything similar to that? That's a pretty big move. And in the past, gold's been leaving in the past near term, 2 months, 3 months, whatever, this year maybe. we have seen gold leave Bitcoin in the dust and go to new highs. Looks like it'll do 4,000 easily, right? Do you think Bitcoin eventually catches some of the same money, the same bid?
Yeah, I think Bitcoin earlier this year may have been struggling with some of the deleveraging that was happening for institutional investors.
Just selling what they could.
Yeah, selling what they could, and I think that suppressed Bitcoin, especially over weekends. But now that deleveraging is done, I think that Bitcoin is going to catch up to gold, and Bitcoin's old high was over 110,000. So I think there is a lot of room to catch up as a sort of non-dollar asset.
As for the equity markets, you think stocks are attractive, but uncertainty is still the name of the game, and it's going to persist. You think the high in the VIX, what'd you say that was on April 7th, that holds?
Yeah, I think it's going to be hard to match that level of fear again. So I think we're probably past peak uncertainty. I mean, even with this Fed controversy, but I don't know if we're past maximum pain. I think that there's still risk that the economic consequences are going to cause markets to be hesitant, but it's going to be hard to match that fear again. So I think a structural low did take place.
I think we could match that fear again if, number one, Trump fires J-Pow, or number two, the bond market screams 1 to 3% higher. I mean, I think we could definitely get to that level of fear if we have a credit event or if Trump gets rid of J-Pow. Assuming those two things don't happen, yeah, I do think 4,800 was closer to a bottom, but obviously if we have a credit event, markets are not going to like that either.
So I don't know if I really think it's going to be hard to match. I could get a lot more. People were pretty fearful. Yeah. But you don't think this is going to be the absolute washout that some people are thinking, something similar to past breaks that were really significant. So let me ask you this then, just specifically, does the S&P have a closing bear market low from here? What are we down? 14% now, something like that.
Yeah, I mean, 4,800 was the low we made a couple weeks ago.
Yeah,
and I think that there's a chance we could be drifting dangerously close to that again in the next couple of weeks, because there's still probably a lot of investors sitting on their hands and there's uncertainty. But on the flip side, I just think that we have to keep in mind that, one, companies are very resilient, and we'll learn about it during earnings season. But we could have a positive policy shock as well.
There was apparently...
What does that mean? Like a backing off of some of the tariffs?
Yes, we could have something that the market sees as a win. Whether it's going to be one of the 15 countries that we have a trade deal with, or a de-escalation with China, which of course overnight didn't seem like that was a possibility, but there is room for a positive policy shock.
Apparently there's still another place where they trade stocks. Have I got that right? The New York Stock Exchange? Are you ringing the bell there?
Yes, our company is ringing the bell this morning at 9:30.
At the New York Stock Exchange. We admit that we like them. But you're ringing because one of your ETFs has reached $1 billion, and it's called the...
All right. So Tom Lee is bullish, but also hesitant to be super bullish, given the nature of the volatility that we're seeing right now. S&P 500 down about 1.1%, Tesla down 4.3%, Nvidia down 3.3%, the Qs down 1.4%, and then Bitcoin holding up just below 87, but that one is starting to go a little red. What's green right now? Well, you got MicroStrategy that did buy another 5,655 Bitcoin, and Coinbase that is green, as both of those are following crypto, Bitcoin. That has been holding up. So MicroStrategy right here, this is what we got from Saylor. He's acquired 6,556 Bitcoin at $555 million, 84,000 a coin. They now have 538,200 Bitcoin. That's more than 1% of the entire Bitcoin supply. And their average is in that 67,000 range. So Saylor's plan seems to be working, regardless of all the volatility in the broader stock market. Real quick, this is also a chart of Bitcoin and the NASDAQ. They are not performing identical to each other. On the bottom, you have the NASDAQ. On the top, you have Bitcoin. Not performing with each other. I mean, usually Bitcoin would be down multiples of the NASDAQ, and right now it's holding up as the NASDAQ collapses for the beginning of the year. So now the M2 money supply is going up as well. If you've seen a chart of M2, Bitcoin's actually lagging the M2 money supply, and Bitcoin historically follows M2. So if M2 is going up, Bitcoin theoretically should be going up, but it also follows the NASDAQ. And so it's kind of choosing liquidity over the proxy that people use to measure risk, which would be tech, which is the NASDAQ. And I think if you're a Bitcoin bull, that's got to be exciting for you. Now, this is good for Robinhood because Robinhood makes a lot of money off Bitcoin. However, other parts of their businesses are struggling and that's why Robinhood's red, even though Coinbase is green right here, because of the S&P, Nvidia, Tesla, all those stocks are down. That's not good for Robinhood as the proxy on the overall bull market, even if Bitcoin trading volumes might be up. And it might soften the blow if there's, any reduced trading volumes if crypto's up, but it definitely doesn't solve the issue if the entire market's taking a hit. Tesla right here, down about 4.28%. We got Tesla earnings tomorrow. I have no idea what to expect from Tesla. I think Elon's going to have to really give a good story if the numbers are crappy. I expect the numbers to be pretty damn crappy. However, I don't know how much is baked in or how much is not baked in. It could be very similar to the deliveries event where we had a horrible delivery numbers and the stock was only down 5%. Or it could be one of those things where Tesla's reducing guidance for the full year. They see a lot of headwinds. They talk about the tariffs being an issue. There was a Reuters article that is unconfirmed about the Model 2 affordable $30,000 car being delayed indefinitely. That could potentially be bearish. So, if I had to guess, I would say Tesla's not going to do well tomorrow, but especially in this macro. But no one knows. And tomorrow after the bell, we're going to really see how it plays out. A lot of you are saying below 200. I think a lot of people think it can definitely get below 200. I think that too, but I also think that, if everyone's saying it, it might not as easily happen. However, given, how much the market deteriorates today, if it does have a rough Monday, then Tuesday is not going to be a fun day for them to report earnings. Netflix got upgraded across the board. I mean, people really like the Netflix earnings. In a sea of red, you've got Netflix struggling to still stay green. Market doesn't want to take it red because that earnings was phenomenal. Increased operating margins, revenue, EPS, increased guidance for all three of those metrics going to Q2. Didn't really get worried about tariffs or recession or any of that stuff. So Netflix deserves to be up like 5, 6, 7% in my opinion. But given everything's red right now, it's like holding on to 2%. And if Netflix goes red after that type of an earnings, that means the broader market's probably getting hit pretty badly, which is what we're going to see if that plays out later today. Yeah, so those are kind of the main headlines as we get into the market open. Again, the dollar is selling off, bonds are selling off, stocks are selling off, gold is going up, and it is obviously, I think, some level of a foreign exit out of U.S. Assets, whether that's the dollar, U.S. stocks, or U.S. bonds, and they're leaving. And, you can't really blame them right now. There is a decent level of uncertainty. I think they will come back very quickly as certainty starts to become more aggressive. But, we just don't know when certainty is going to become as aggressive as people need for it to be to get more excited about the broader markets. You can see right there, the dollar right there, 98.13. This is a 3-year low on the dollar. So we haven't had the dollar go this low in over 3 years, which is good for a lot of international companies like your Grab, your Nubanks, your Mercado Libres. But the reason the dollar is going down is the issue. It's more of a lack of confidence in a lot of these U.S. companies. United Healthcare, they were down 22% on Thursday. They are now down another 1%. That's really hurting the Dow Jones. Venture Global's down about 2%. Uber right here down about 1.5%. Again, Hertz got downgraded this morning to $2. They're down about 10.8%. DJT's down about 3%. Trade Desk down 3%. And then you got Tesla leading the way, down about 4.3%. Did Trump tweet yesterday? Yes, Trump tweeted, and he tweeted about tariffs. He tweeted aggressively about tariffs. So what did Trump have to say? Well, he says that any country that's trying to navigate away from the tariffs is going to be punished. And he said that the ways that countries might be trying to get out of it, like currency manipulation, dumping below cost, counterfeiting, transshipping to evade tariffs, protective agricultural standards, and trying to get out of those, all of those different elements that countries may be using, which we're already seeing reports that countries and companies are finding different ways to try to navigate these tariffs. There's some reports of small businesses going to Canada instead of China to be able to lower their tax rate from 145% to 20%. A lot of that stuff Trump says he's going to really crack down on so that the tariffs can't be avoided. I think this is more so an intimidation tactic. I mean, I don't think he's going to be able to meaningfully get rid of all the different ways that people are getting rid of tariffs, but he's trying to prove to people that we are very serious about tariffs. He says, since our announcement of Liberation Day, many world leaders and business executives have come to me asking for reliefs from tariffs. It's good to see that the world knows we are serious because we are. They must right the wrongs of decades of abuse, but it won't be easy for them. We must rebuild the wealth of our great country and create true reciprocity. But for those who want the easiest path, come to America and build in America. Again, my opinion here is that I think we've created a lot of prosperity over the past 30 years. And that prosperity has been in part due to the fact that we have a trade deficit. Have there been trade-offs? Of course. The question is just, do we need to rewrite the entire world order by having everything made in the United States and kind of undo the benefits of the trade deficit, which one of the benefits has been the United States dollar has been the world's reserve currency, and we can print as much of it as we want because all countries want to do business in USD. So, I mean, it's one of those things where I have no idea how this is going to play out. This is starting to get more uncertain day by day, just given the fact that we don't have any deals yet. Now, there was a report by Fox on Saturday that a Japan deal is likely. That report was edited on Sunday to say a Japan deal is happening, but it's not likely to be announced anytime soon. The Japanese prime minister this morning came out and said, hey, we are ready to have a deal with the United States, but we simply cannot concede to everything that the United States wants, because we need to also watch out for our own national interest, which is fair. I mean, like, at the end of the day, Japan is their own sovereign nation. They have to worry about their own interests as well, which I think, look, I think that's going to be similar to pretty much every country is going to say, hey, we want to get a deal done. Like, we obviously like the United States, but we can't concede to everything. That's not how a negotiation works. And so from that perspective, it just might take longer to get some of these deals, and stocks might have to face some pain until that plays out. Now, China responded this morning. China says, we firmly oppose any party reaching a deal with the expense of China's interests. With U.S. tariffs on Chinese goods now at 145%, tensions are continuing to rise. China vows retaliation against countries that follow U.S. calls to isolate Beijing. There was a Wall Street Journal article last week that was essentially implying that the United States' strategy might be to completely isolate Beijing and get all these other countries, whether it's Cambodia or Thailand or Vietnam, to just like pick the U.S. over Beijing. I think a lot of us have been skeptical on that idea as a concept, because you kind of can't isolate the cheapest cost of labor in the world, especially for all the goods that the world buys. And China is now saying, hey, if you choose to do that, just think twice, because if you do that, it's not going to be friendly for you guys from China's side. And if the United States can't supply the cost of labor that's as cheap as China, that's when things get iffy. So we're going to have to see how this plays out. Another week in the markets, another volatile day to start off the markets. Monday, April 21st, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. All right, let's get into it. Here we go. The market is now open. Nvidia opens $99.14, 2.3% down on the day. Wake your ass up. Here we go. Robinhood, 4102, that's down. Meta, down about 2.3%, 489. TLT continues to go down as the 10-year and 30-year continue climbing as well. Palantir, down about 1/3%. AMD's down about 2%. Weeble's down 10.2%. Who would have thought Weeble would fall from $79 back down to $23? Dow Jones down about 1%. United Healthcare down about 0.2%. Celsius down 1/3%. The S&P 500 opens down 1% on the day. Uber's down 0.5%. Hertz is down 11%. Google's down 2%. Google's facing 2 lawsuits, one by the United States, one by the United Kingdom. So Google's obviously not in the best position right now. Netflix goes green. Looks like the market was okay with the Netflix earnings. Netflix up 3.6% right here. And I got to admit, it was an incredible earnings. So if Netflix can actually stay green in the midst of this volatility, that's like kudos to Netflix. It deserves it. But decent earnings from Netflix also sets the precedent that a big tech company can go green, even if this is super volatile, if they put up the right numbers. So the question is, can Tesla, Google, Meta, Amazon, Apple actually put up those numbers? Nvidia right here, 98.92. Bottomed at 97.67 right now, then bounced right off there. It might go below there again, but right now it's holding at these levels. Robinhood goes green, 41.30. That's probably because of Bitcoin right here at 87.3. MicroStrategy is up about 3%, 3.26. That's green. SoFi, 11.08. That was up a little bit more last night in the pre-markets, but that's currently up right now, probably off the loan platform deal they got on Friday. They have earnings next week as well. Palantir, 94.11. That goes green. We're seeing some of these growth stocks actually go green. Tesla continues to get hit. almost 5% down on the day. Interesting. Palantir and Hood go green. Tesla continues to fall. Netflix deservedly goes green, up 4.5%. The S&P still down 1%. Nvidia still down about 3%, but Tesla is really the one that's getting hit the worst right here. TSLL leveraged Tesla. That one's down 9%. Reddit's down about 2%. Upstart's down 0.5%. Where are the semis? The semis are all red across the board. SMCI down 2, ARM down 1, Qualcomm down 2, Broadcom down 2, ASML down 2, ON down 2, Nvidia down 3 or almost 3, 2.3, and then AMD down about 1.94. Currently right now, Grab is green. Where's Grab? Grab is green. Grab is slightly green. The VIX is up about 8% right now. So the VIX is 8.63. That's 32.21. VIX is green. Makes sense why the indices are red. S&P continues to go down. The Q's 1.26, trying to get a little bit of a green candle, but that one's still red. S&P now down 1.1, and then Tesla right here kind of trying to go green off of a 228 level back to 231, but still red on the day. Tesla Netflix spread trade looking like the story. Yeah, I mean, you might have people consolidating into their big tech pick as Netflix, given the narrative now on Netflix is becoming that it's recession, what do you call it? Recession proof, given no one's going to cancel their Netflix subscription. And the fact that they grew as much as they grew in Q1 is kind of proving that that thesis is not horrible. We'll have to see if that thesis plays out if we do have a recession, but it's not a crazy argument. Bitcoin right here, 87.4. But Tesla obviously is not recession proof because it's hard for people to buy cars, A, with these interest rates, and B, if you have a recession, like a car is, especially a Tesla, is not a necessity by any means. Palantir right here going green, up 2.06%, 95.74. Palantir holding on to some momentum right here. One of the only green, or are other SaaS names green? Yeah, wow, dude, look at the left-hand side of my screen. Every SaaS name is red except Palantir. Datadog, Snowflake, Oracle, Salesforce, MongoDB, Adobe, ServiceNow, CrowdStrike, Zscaler, Twilio, Intuit, GitLab, Atlassian, all of them red. And not just red by about 1.2 to 2.3% across the board. Palantir's the only green one. What a champ, dude. What a freaking champ, dude. We talk about a unicorn. Like, goodness gracious. That is pretty incredible to see it go green across all the semis that are going red right here. So nice to see Palantir getting a little bit of momentum. Why is it green? I think the NATO deal and the potential ICE contract they got. Well, that's not potential. It's a $30 million ICE contract, a NATO deal, and then the IRS stuff. I think you put all the government growth together. There's been a lot more headlines about Palantir working in the government. Maybe that is what's giving it a bit of a differentiator from like an Atlassian or a Datadog or a MongoDB. So that might be the reason why Palantir is holding up and getting some momentum. S&P 500 right here continues to go down about 1.2%. Meta now 1.88. That's a low for the year at 491 on Meta. They've got earnings coming up in about 2 weeks. Google right here at 150. Robinhood's barely holding on to its green. That it wants to go red because everything's down, but it's holding on because of Bitcoin. The Bitcoin miner is up a little bit on the day, but MicroStrategy right here up about 3%. Elf Beauty as well, down about 1.6%. Oh yeah, Mr. Aswath Damodaran, I think he came out, the like dean evaluations guy from NYU, and he said he has a limit buy for Palantir. I don't have his price. Does anyone have his price? Because I don't think he disclosed what price, but he did say he is interested in buying Palantir. I don't know if that's the reason Palantir is up right now, but that guy is a stickler when it comes to valuation. And what has been the biggest concern by all the bears on Palantir is the valuation. So the fact that he's coming out and saying, hey, I actually think Palantir might be cheap, it means that, in my opinion, it means that he thinks the growth story for Palantir is just starting, which is why you would buy Palantir at these levels. So I don't have the exact price, but it does seem like he's excited about Palantir. S&P right here, 519. That's down about 1.25. Meta down about 1.89. Coinbase up a little bit. Nubank, are they green? Nubank is red. That's down about 1.2%. And Grab is up a little bit right now. This is interesting. This is an interesting open. Tesla, wow, 5.2. That one continues to get sold off. I guess a lot of people are afraid of a bad earnings on Tessie. Trying to get a bounce off 228, but that one continues to get hit. Where's Nvidia? Nvidia should be falling too then, right? Yep, look at Nvidia, 3.7. Nvidia and Tesla, the story of the day. They're taking down the S&P. Down 1.2. They're probably going to take down Robinhood. Palantir losing a little bit of its steam right here. Robinhood just goes red. MicroStrategy kind of trying to hold on as Bitcoin starts to see some red candles. Nvidia and Tesla, those two are the ones that are getting hit today. Thoughts on Adobe? I am not a fan of Adobe. I haven't been a fan of Adobe for a while. I just think the core product is not that interesting. I think that Canva, there's so many other alternatives to Adobe. And I just don't like the CEO either. Like I've heard him talk on earnings calls that I don't know. You got to invest in people at the end of the day. And I don't see some ambitious vision. And I also think the guy is very arrogant. Like when you listen to him, he's like not the type of guy where I'm like, yeah, he's going to, be a good steward of capital. So that's my own nitpicky thing about Adobe. But in general, I just think there's so many other products that do what Adobe does. There's not a unique moat there that to me is really exciting. Free cash flow looks good, but in an AI growth story world, I don't see the AI growth story for Adobe. Netflix right here, $9.95. That's losing its steam as well. Tesla continues to get hit, 5.5%. Nvidia down 3.56%. Gold continues to go green because why not? Gold now $34.12 an ounce, up 3% on the day. Tesla's down due to news of the cheaper Model Y being delayed. That's fair. That's a good point. That story hasn't been confirmed yet. So if Elon comes out and says that's fake news, then maybe that changes. Granted, it's been 3 days. I feel like Elon would have said it's fake by now. He has not said it. Maybe he's waiting until earnings to like surprise launch the cheaper Model Y or whatever. But yeah, that could be an easy reason why Tesla's down. Nvidia right here down about 3.74%. Almost hitting down 4% on the day. Opinion on Amazon. I think so. There was a great chart that was going viral over the weekend. Wow, Amazon below 170. That's a new low for 2025. That's your new low for 2025. So let me show you this chart on Amazon. Got a lot of attention over the weekend, and I think it's a fair chart. The problem is, in my opinion, unfortunately, we have a lot of tariff issues. So this is the chart, and this is essentially net income follows stock price. So you can see right there, or EPS follows stock price. Amazon's EPS is growing dramatically. Stock price, as per the past month and a half, has taken a hit. So the argument here is that, hey, if they continue to increase their EPS the way you see it on the brown dotted line on the screen, the stock price should increase as well. The problem here is that we've got tariffs, and Amazon sells a lot of stuff across the world, most notably a lot of stuff from China. So from that perspective, that's obviously not going to be the best thing in the world for them, and they're having to deal with some of that pain right here. Amazon, oh wow, Amazon got to 161 last week. I didn't even see that. So Amazon now getting close to the levels that it got to back on April 8th, 168. So this is not a new low for them, but this is very close to a new low. Robinhood slightly going green. SoFi as well, slightly going green. The S&P down 1.2, Tesla 4.9, and Nvidia down 3.3. Netflix barely holding above 1,000, but trying to maintain and hold that level above 1,000. And a surprise, India is going green. Yes, India is going green, which is nice to see. INQQ, this was the ETF we looked at about 3 months ago, which is the India ETF. Starting to be a little bit more of a rebound in the broader Indian stock market. It's been a rough couple months for India as well. India also did put on 12% steel and aluminum tariffs today. So that could potentially be a catalyst for why markets are rotating a bit into India. India plans to roll out 12% safeguard duty on steel imports at the earliest, a government source told Reuters. The move aims to counter a surge in low-cost steel coming from China and other countries. That would obviously be good for Indian steel companies, but that could be another reason for some of the momentum. Tesla keeps oscillating between down 4 and down 5. It's like going up and down 1% every other minute. Now it's down 5.39. 227.24 was the low on Tesla. It's at 228.55 right now. Again, the earnings fears going into tomorrow are playing a role right here for Tesla. Can we acknowledge that Palantir and Nvidia are about to have the same share price? That's kind of crazy. Obviously not the same market cap, but that is kind of crazy. Nvidia right here, 98.05. And you got Palantir holding on to a little bit of green, 95.23 right now. Bank of America down 1.5. Archer's down 2.4. The financials are down. Retailers, let's check Walmart. Walmart is flat. Retailers are flat so far. Big tech is really the one that's taken it badly. Retailers and financials not getting hit nearly as worse as semis and big tech. Shopify, there's a rumor that Shopify is going to be working with OpenAI to power like a shopping agent inside of OpenAI. Shopify right here down about 1.81%. But there are some rumors going around that OpenAI and Shopify could be collaborating. I think that would be genius for Shopify. I mean, that'd be, if you're going to have automatic AI-based shopping, you might as well have Shopify as the back end for that, given they're one of the best shopping platforms on the planet. But that could be a catalyst for the company as well. Reddit right here down about 3.4%. Then Google goes below 150 again, 148 on the day. Did you mention Grab green? Yes, Grab is green. Again, I think Grab is going to need a really good earnings to sustain this momentum. I think it's green right now because the dollar is down, which is good for Grab because they report in US dollars. But, you know, we need overall tariff volatility to go down for the market to get excited about a name like that. Tesla right here, again, down 5.4%. Nvidia still down 3.4 in the S&P, now down 1.3 on the day. Bitcoin, 87.5. Very curious to see if the Bitcoin ETFs start getting positive inflows. They've been negative for the better part of a month now. Even last week on April 16th, they lost $170 million. So the ETFs really hasn't been the story. I think the story has been sovereign wealth funds across the world, foreign entities, and then Michael Saylor. I mean, that's what's been keeping Bitcoin elevated and potentially leading to it going the opposite of the NASDAQ. Tesla large capital raise expected for XAI in upcoming months, CNBC citing sources. Okay, that's good for XAI. That's not good for Tesla, though, especially because Tesla doesn't even have a stake in XAI. We talked about this last night. So if XAI is going to raise a lot more money, I mean, technically that's good for Nvidia because a lot of that money is just going to go into Nvidia chips. But it's not like it's going to necessarily help Tesla unless Tesla's participating in that raise. Let's say XAI raises like $10 billion and Tesla participates in it. I mean, that could be an argument. Granted, Tesla would be losing money at that point because they'd be investing in something, but question would be at what valuation? Did Trump tweet something? Hold on. Let's see. Oh boy. All right, here we go. We got a Trump tweet. This is every day, bro. Every day. All right, let me just put this on my Twitter so we can all read it together. I haven't read the tweet, but I see Joe Biden's name in it, so get ready for that. Okay, here we go. Every day, bro. Is the S&P gapping down? 1.36. All right, that's the lowest. All right, let me just read it and then I'll put this out there. All right, here we go. He says, preemptive cuts in interest rates are being called for by many. With energy, he's talking about Jeremy Siegel, to be honest. With energy costs way down, food prices, including Biden's egg disaster, substantially lower, and most other things trending down, there is virtually no inflation. With these costs trending so nicely downward, just what I predicted they would do, there can be almost no inflation, but there can be a slowing of the economy unless Mr. Too Late, a major loser, lowers interest rates now. Europe has already lowered 7 times. Powell has been too late, except when it came to the election period when he lowered in order to help sleepy Joe Biden, later Kamala, get elected. How did that work out? Okay, so it looks like Trump definitely watched CNBC this morning. And he is calling for rate cuts given he is thinking that Powell politically cut for Biden and is not returning the favor for him. S&P reaches a new low of the day, down 1.45%, 518.82. Let me just put this tweet out there so you guys can see it. This is turning into quite the year for 2025. Trump essentially saying Powell cut rates for Biden politically and isn't returning the favor for him. Well, again, dude, I think if Trump tries to get rid of Jay Powell, we're going to have some issues. I don't think the markets are going to like it. There's no way people are going to buy our bonds with this type of volatility. Like, if we can get rid of Jay Powell, it's going to be aggressive. It is going to be very, very, very aggressive. Nonetheless, this is how it's playing out right now. So you got the S&P down right here. Nvidia's down a little bit right now. Again, Trump just putting out this tweet. This is exactly what Siegel said this morning again. Siegel basically said, hey, we need to do these preemptive cuts. And I mean, even the language that Trump is using is Siegel's language. So it looks like he's basically referencing what Siegel said this morning around preemptive cuts. Siegel was the same guy who said we should cut back in August of 2024. So I think when Siegel's crying about a cut, you can't necessarily always take it seriously because, I mean, like, what changed between this week and last week? Why wasn't he crying for a cut last week? Bonds were actually spiking last week. It's not like bonds spiking right now are new. So it seems more so like he's just getting scared, which is what he tends to do when he calls for a cut. And I don't think Powell's going to acquiesce. I don't think Powell cares. And Powell told us at the Economic Club of Chicago last week how he feels. And he does not think that he needs to come and save the markets. He does not think the uncertainties in the markets are bad enough to be able to create any pain. He even said he thinks the market is functioning the way the market needs to function. He says he's a fan of how the market's reacting to all this, essentially by saying, hey, the market's pricing in uncertainty, and that's why stocks are going down. But he's not saying that the markets are collapsing because of some pandemic that we don't know about. His argument is that the markets are acting the way the markets would act if there's massive uncertainty. And you could tell he doesn't blame himself or the Fed for any of that uncertainty. Where's the 10-year? Where's the 10-year? 10-year right now, 4.368. That one's still elevated on the day. And the 30-year, 4.868. They were a little bit higher an hour ago. So they've started to calm down a little bit. But both of those are still pretty high right now. Oh boy, oh boy, oh boy, oh boy. Again, I am still of the belief that if we get a deal with China and a lot more deals, this stuff can reverse. But it looks like Trump is not even focusing on the deals anymore. Now he's just more so focusing on getting rate cuts, which is actually, to read into it a little bit, if he's this obsessed with rate cuts, it might mean that the deals are not going that well. Because if he's actively calling for the Fed every single day to get cuts versus getting deals done, which would calm down the bond markets, A, it would calm down the stock market, B, and then C, it might get the Fed closer to a cut if we get these tariff deals because we would renegotiate lower tariff rates. But if Trump thinks that the deals aren't going that well or that he's not going to be able to lower that 10% universal tariff to something like 5%, then the only choice left to get lower yields is to get rates to come down. That means he needs to put pressure on Jay Powell, but it doesn't look like Jay Powell wants to acquiesce, at least anytime soon. Yeah, this is aggressive. This is very, very aggressive in terms of what we're seeing. Now, the market so far, I know we're down 1.4% of the day. They're not really getting hit necessarily as bad as we saw over the past couple of weeks, which is crazy because usually if the S&P falls almost 2%, you think that's a bad day. But based on what we've seen, 2.5 to 3%. I mean, on Thursday, we were down 2.4% at one point. So it's still holding up kind of okay in the midst of this volatility, but we're still only 20 minutes into the day, and we'll see how this plays out. Bitcoin right here, 87.5. That's holding up a little bit as well. That's helping Robinhood. SoFi right here at 1106. Netflix 1005, still holding up about 3.3%. Amazon down 2, S&P almost down 1.5, and the Qs now down 1.56. Kris, good morning. How are you?
Dude, every day it's like the market's being written by tweet, man. It's a very interesting dynamic. I mean, I'm reading between the lines here, and basically what this is telling me is that Trump knows he screwed the economy with his tariffs. It's not going well, and he needs to shift the blame to somebody else. So now he's basically going to Jay Powell. So he's saying, okay, this is perfect. If the economy doesn't do well over the next coming quarters, the reason why is not because I screwed up by trying to do unilateral tariffs. It's because Jay Powell didn't cut soon enough. You see how he's trying to shift the blame now?
Do you
So
think he will
thing?
get the public on his side about it's Jay Powell's fault, not his fault?
It depends on how enamored you are with the MAGA people, because I'm already seeing it on Twitter. Like everyone's like coming after Jay Powell, and I'm like just go to Twitter, type in Jerome Powell, and you'll see all these people like, oh, Jerome Powell's politically motivated. That's why he's doing it. And I'm like, y'all realize that the 50 basis point cut came in September after the Japan carry trade issue, and PCE had actually gone down significantly during that time. And then the other two cuts came after the election.
Yeah.
So one came in November 7th, and the next one came in December after Trump was elected. So there's no, oh, Jay Powell is being political. He's just being what he's supposed to be, which is data dependent. And the data right now is saying, look, inflation has come down, but I don't know what the impacts of these tariffs are going to be. And Trump hates that. You know, he's like, oh, he's screwing my plans with this tariff thing while not supporting me on it. And US and like foreign investors, they make up a good deal of the market. So, you know, the capital's fleeing the country. That's why you're seeing dollar go down. You're seeing like US denominated bonds go down. You're seeing treasuries go down, and you're seeing stocks go down. You typically don't see this happen. Like, especially with the bond and stock thing, usually people will rush to bonds as a flight to safety, but even that's going down. So that means that people are kind of reversing, capital flows are reversing, and they're going outside the country. And I think it's a damn shame, because that just means that people are not positive on the US exceptionalism, you know? So
what do you think at this point changes the narrative? Because at first we said it was deals, but I agree with you. If he's focusing this much on Jay Powell, it doesn't seem like deals are getting announced soon. So how do you think this plays out over the coming weeks?
I mean, from what I could tell, the deals are not coming because the ask is too much, or they don't even know what they're asking for. You know, so some of the things that they're asking for, like even this weekend when Trump put out a tweet, like the Europeans are not buying our GMO corn. Like the European, like shit, we don't even want to buy this genetically modified shit. Why are you trying to get the Europeans to buy it? You know, then like the Japanese, I guess like there's like a bowling ball test or something. I don't even know if that Japanese thing is real, but basically they're saying you need to buy more American cars. And, you know, the Japanese are like, all right, whatever, you want to sell us more cars, we'll accept more cars. But don't be surprised if the demand for your cars is not high in Japan. You know, so I think a lot of the stuff that he said on there, like his asks, were kind of like pretty much, they're pretty asinine to me, to be honest. You know, and then this whole thing with China. So I think a lot of people are in this zone of, number one, you've got markets that were already riding on high multiples, right, and high valuations. So then you've got all this market uncertainty coming down into the picture now, and now you've got this trade war coming. So basically, the entire market is going down, and you know, it's the cause of this is threefold. So some of it you can blame on some of it you could just blame on pessimism and market uncertainty, and some of it's on just high valuation. So, you know, I think this is where each one of those things, if tackled individually, would be good long term for a buying opportunity, right? So imagine Trump right now comes down on his rhetoric, you know, market multiples come down to a sort of a normal amount, you know, and then last but not least, we get some certainty where, you know, every policy decision isn't implemented via tweet. That could typically help, you know.
what is the implication of the US dollar going down? Like, why are people selling off that dollar?
Capital flight, man. You know, people are converting back to if you want to buy stocks in another or another asset class in another country, you got to convert your dollars to them and buy the stuff over there.
So you think people
Yeah.
would rather have their own currencies like the yen or the yuan over the USD because of the fear of whatever tariff volatility might have on the dollar?
Yeah, I mean that's why you're seeing markets move to stocks in those regions, right? Which are undervalued relative to historically, right? So if you look at Japanese yen went from like 150, I think, to 140 right now.
142.
Yeah, and same thing with the euro. So people are dumping US and buying Europe, you know. So it's kind of, to be honest, this trade war ended up being one of the stupidest things because we were riding so high in terms of like American exceptionalism, and now it's a complete 180, and people are like, wait a second, like, do I really want to keep my money in a country that's being led by a guy like this, whose policies are not driven by reality, that they're more driven by just whims? Even the I think the rollout, the haphazard rollout of the policies around Liberation Day probably accelerated that move down. People were hopeful, including myself, that these policies were going to be somewhat measured in how they were doing, where it would be reciprocal. Because I mean, you heard reciprocal tariffs, right? So you thought, hey, if they've got a 4% tariff on our goods, then we're going to put a 4% tariff on. No, their logic is, no, we're not doing that. If the trade deficit is X, then you're definitely cheating us. So we're going to put like a 50% like tariff on you. And I don't think anyone in the market expected that. The one thing I have noticed is that all the people that are like bearish, they're giving a very they're taking their victory laps right now, be like, see, I told you, blah, blah. Their entire bearish narrative was Trump is crazy. I don't want to be in the market because Trump is crazy. And I'm like, yeah, but in 2017 to 2020, we had a pretty good run, even though it was Trump the entire time. So I don't think that Trump is not pro-growth. I do think that he's pro-growth, but to some degree, I think he's got maybe like a little bit of a leeway where he can still blame everything on Biden and the Biden team. And I think he's taking every chance that he gets on that, right? Saying, look, I got handed a shitty deal because of Biden. And it's like, okay, let's kind of see where this goes.
Let me pitch a theory to you. I'm curious what you think of this. What if Trump waited to do this whole tariff stuff in 2026, meaning he let J-Powell cut rates, he went super pro-growth, deregulation, yada, yada, CPI, PPI coming down. He got rates down to like 3%, 3.5% instead of 4.5%. And then in 2026, as rates are lower, he went down.
He wouldn't have had enough time for the midterms.
Well, but like he would have had a great stock market and a really good economy going into 2026. So he would have had some political capital, even if he ruined it after the tariffs. Maybe,
but I don't think there was enough time between then and like the midterms to really like implement policies like this. The other thing is, right now there's still an opportunity for him to kind of reverse course and the market rides higher, and then people kind of forget about this whole thing. People, from my understanding, have pretty short-term memories when it comes to these things. Like a couple of months of downturn, if you can at least get a really good ride up in 2020, towards the end of 25 and 26, people will forget about it. But if this drags on into 2026, then yeah, you're looking at pretty much a Republican sweep in both the House and Senate, which would be the worst case scenario for him, because that means that now everyone would, basically impeach him, and all his cabinet secretaries would always constantly get harassed, and, investigation after investigation, and, we'll see what happens after that. But the worst scenario for Trump, like I said, is the Democrats getting back in charge and then undermining every one of his policy decisions and being a check on him, which is bad for him and his policy moves. It would be good for the markets, though, because the markets tend to like that there is a better check in place against like policy uncertainty that Trump is putting out there. So, The
what
question.
is your
yeah.
what is your take on the story that Besant and Lutnick waited for Navarro to go attend some meeting so that they could rush into the Oval Office and convince Trump to issue a 90-day pause?
Dude, that when you hear stuff like that, it's disheartening. It really is very disheartening to see something like that. Mainly because that means that there's people around the president that are sane, and then there's people that are around him that are not, that are good, but the policy decisions are being carried by insane people, right? And this is like, okay, is Trump actually talking for himself, or is he just like the child that, like everyone influences to do things, And the thing is, like, he's definitely got like the tariffs thing in his brain for like the last 30, 40 years. But you can have someone like Peter Navarro who basically, instead of kind of like firewalling that idea and keeping it measured into just full on, hey, we need to do a trade war with China, so the people around you can influence you into doing crazy shit. The question is Trump smart enough to say, hey, this guy is leading me into the dark hole versus these guys who are trying to save me,
Yeah, I think more and more we're finding different influences that are happening in the White House. We saw Elon unfollowed Besant over the weekend. Tesla right here down about 6.7%. So obviously he's having some issues in the context of Besant and the way he's going about business with Trump. Do you think right now, Kris, that if you were Jay Powell, would you be cutting rates right now?
I would not be cutting rates, at least not
Why?
not for May, because I don't know the impacts of the tariffs thing just yet. The challenge with Jay Powell right now is that it's this uncertainty that rates are not. The worst thing you could do, in my opinion, is you cut rates and then inflation starts to skyrocket again, and now you have to get back into cut. Like, markets, if there's one thing markets hate, is uncertainty. And you don't want to lend to that, where the Fed is like, well, I'm going to cut, and then I'm going to not cut, and then I'm going to raise, and then I'm going to, like, no, like, you can't do that.
Yeah, well, that's what Siegel was saying. Siegel was saying, well, they can just raise again if things get bad.
Nah, that's not, you don't want to be into that constant back and forth of cuts and no cuts, and not to mention raise. Like, the topic of a raise would be perilous to the markets, because at that point, like, how much further are you going to raise? And then it would be really bad. So instead, I think Jay Powell actually sent Trump a little bit of a message too, by saying, your tariff policies are inflationary. Stop. If you don't stop, you're going to cause a major issue. And I'm not here to save you from your bad policy decisions.
Yeah.
And theoretically, and technically, Jay Powell is right. It's not his job to, be the, like, forgive bad policy decisions. It wasn't the same. It's the same thing with the Biden admin spending too much money that caused inflation. It wasn't Jay Powell's fault that inflation skyrocketed. Now, it was his fault not raising rates sooner, but everything is 2020 in hindsight,
Right.
And like I said, the consequences of the stuff that we're seeing right now, it's not going to be felt at least for another 30 to 60, maybe even 90 days, because, like, the tariffs, as they get implemented, people are going to work down existing stocks that they already have. The consumer, is going to basically be strong until they start to see layoffs. I mean, the thing that should really stick is the layoffs that just happened at Mack Trucks. Did you see that?
I did not. What happened there?
Yeah, and Mack Trucks. Mack is like one of the biggest, like, makers of trucks, for transporting goods and services. They're laying off people in Pennsylvania because, like, demand for our trucks has gone down since the tariffs. Which makes sense, because the thing is, like, if you see economic activity slowing down, then you have to make decisions as a capital allocator, in which case the first thing you usually tend to do is, cut back on marketing and stuff like that. Mac doesn't really do a lot of marketing. It doesn't need it. So where can it do its thing? So it has to do layoffs. And I think the more news that layoffs are starting to come around, and inflation, and what is that thing called? Unemployment starts to rise. That's going to be the main catalyst for Jay Powell cutting. But
so shouldn't he cut before that happens? AKA now?
that's not necessarily the case. He might end up causing stagflation if he does that, where you get bad unemployment numbers and high inflation, which is even worse. So literally Trump has put us in a really bad place right now, where he's actually on one hand weakened the economy while at the same time stoked inflation. Like that's what, so unemployment might rise and inflation might rise if Trump doesn't like back away from the tariffs. And he really needs to back away from the tariffs. That's why a lot of people on the market are probably anticipating some deals to come out of this, where he can take symbolic victory laps and then say kind of like calm it down. And maybe that's what Besant is hoping for as well, because Besant's goal of getting that 10-year down is failing miserably right now.
Do you think that the fear the Fed has about tariffs causing inflation is a misguided fear if the slowdown, like Mac laying off people, outweighs? Or do you think they're right to say, hey, this is the most unprecedented universal tariff we've ever seen, we need to be more cautious going into this?
I mean, I think they have to be on the cautious side. I mean, you got tariffs that are high, like when you, even with the break, backing down to the 10%, when you average out what it is, when you compare the Chinese ones on top of all of this, it ends up being higher than what we had during Smoot-Hawley, So the good thing is, I don't think anyone really expects tariffs to stay this high for much longer. I think a lot of people are already kind of like dialing their tariff expectations back a little bit, which is why you're not seeing like mass layoffs right away. But
Right.
Trump attacking Jay Powell is definitely not helping the market sentiment right now. And especially with foreign capital, when you start attacking like the central bank's credibility, you're going to get huge moves down, because you're going to get policy uncertainty. I mean, look at the NASDAQ right now. It's down 2.5%. I think the Dow is off by 600 points today.
Yeah. Tesla's down.
Yeah.
Tesla's down 7%. The Nasdaq's down 400 points. The Dow Jones down 500 points. The S&P down about 2% right here. I mean, at the end of the day, the market is obviously telling Trump they're not a fan of these tariffs, regardless of what Jay Powell does or not. So,
yeah. I think this is where you have to look at things from multiples perspective, right? Where when things are really good, you can expand your multiples. You've got policy certainty. Multiples can ride pretty high. But when you have policy uncertainty and then you layer on multiples, it ends up being something where, you could be a little bit more, reserved when it comes to investing. So let me just show you a screenshot, so people understand. Where is it? Window.
Bitcoin right here, 87.4. That one holding up as the markets take a hit. Tesla really taking it now, down about 7% on the day. Nvidia, I believe, is down 5%. Nvidia is down 4.96% currently right now.
Yeah. So can you see my screen real quick? Okay. All right, there we go. All right, can you see my screen?
Yep.
Okay, so you can see here, this is like PCE and CPI, right? And then you also have the FOMC, their projections for rate cuts. So you can see here the federal funds rate is around 4.5, and you can see that we have gotten CPI and PCE is coming down, right? The challenge is right here is when things get a little challenged when it comes to these tariffs. Which direction is this going to move? Now, according to your projections, you should cut. And I think if the tariffs weren't on the menu right now, I think we would actually get a May cut. But the question is, did we actually go down in PCI and PCE because of the tariffs? Because people feel, somewhat scared of spending excess capital when they could be laid off or whatever. So I don't know. This is the direction of this thing is going to actually dictate which direction the Fed actually ends up moving. But more importantly is actually this right here. And you can see my screen, right? Okay, sorry. Let me just put it back on that one. Okay, which is market multiple. So if you look at the S&P 500, like if you include the MAG 8, right? You're at about a 20 multiple. it's not, I mean, on a forward basis. So it's not cheap, but it's not like expensive, at least in my opinion, considering how much the US grows and everything else. But you can see here, usually a band between 15 and 20 is pretty healthy if you want to get into the market. Anytime it gets dips below like 16 is very attractive, right? And you've seen that multiple times, like coming out of the great financial crisis. We had it way below, right? And then you had, of course, the oil crisis in 2016 where energy was down. And then, of course, you had the rate increasing cycle the first time around during Trump 1, and then COVID, and then 2022 after the SPAC debacle where the SPACs all fell apart. So you can see here that where are we actually headed? Like, are we going all the way down to that low level here, or are we going to like taper off somewhere? And so right now, even if you look at the S&P 500 outside of the mega caps, the multiple is about 18 on a forward basis, which means that there actually could still be room for things to go down a little bit.
Yeah.
So
well, we were in an overheated market regardless of the multiples. The reason we kept that overheating is because sentiment was good and growth was phenomenal, but we could not afford a dramatic repricing of the market with tariffs. I mean, there's just no way we were going to be able to hold it.
Yeah, we had the backdrop of Nvidia and AI that were going to substantially increase productivity, right? And so when you have productivity increases, you've got massive amounts of GDP growth, right? So I think that was one of the calculations that people had. I mean, I was listening to the podcast on with what's his name, with Graham Stephan and Iced Coffee Hour with Kris Camillo, right? And he was actually talking about how AI was going to unlock, and human robotics was going to unlock all this potential for earnings and in the future. And I tend to agree that there's a lot of shifts happening where productivity is going to pretty much go up and to the right. The challenge that I have is that when does that actually happen, and when does that actually recognized by the market? Because right now the market is not looking at that aspect. They're only looking at short term. We're seeing a ton of issues around tariffs. So once you take away those tariffs, you can start focusing on AI again, right? And I hope that the earnings calls this time around, they actually reflect that, especially because we're tech investors, mostly tech investors, not all tech investors, but we're mostly tech investors. Tech has a way of like compounding on itself very strongly, but only under the guise that there's an active market looking for it. So you need people investing in tech, and you need people, like especially the consumer adopting new tech. All those things end up causing multiples to expand significantly. So I think Kris Camillo has it right in that I think this could be a generational buying opportunity if you have it in the right companies. And I think the opportunities are definitely coming our way. I'm not so sure I'd want to try to fight this current short-term volatility. So as of right now, I'm just stacking some cash. I do have, and me and you spoke about some positions in TLT, which hasn't been working. But I'm pretty confident that by the end of this year, we should see that kind of reverse, because
so you are still bullish 2025.
I would say I'm moderately bullish. I'm not as bullish as I was coming into this year. I still think that there are opportunities where the market could go a little bit lower than where we are today, only because just how much uncertainty is out there. And I don't think Trump has got the message yet. I think there's still more pain that he's willing to tolerate, that frankly, I mean, it's going to be hard for us to fight. At some point though, he's going to have to say uncle. And Scott Bessent and pretty much the Treasury, and I think even congressional Republicans and senatorial Republicans are probably going to give him a call and be like, you need to end this tariff nightmare, because if you don't, you're going to basically not only crash the economy, but you're basically going to crash the Republican Party for the next 50 years.
S&P 500 now down 2% on the day.
Yeah. When you see when you see like policy decisions like this, they get etched into like the human psyche if you don't reverse course. So like right now, when you say Great Depression, who do you most associate it with? With Herbert Hoover,
Yeah.
right?
Yeah.
You don't want to be like, hey, Great Depression Part 2 came at the hands of Donald Trump or the Republican Party.
And he doesn't want that either. And we know he doesn't want that. So, I mean,
Yeah.
even Netflix,
It's-
dude. Netflix had a great quarter. They're giving up all the gains. They can't keep it in this market. They just can't.
Yeah. No, it's sad to see what we're going through right now. I mean, some of it we probably could have used, honestly, like from a valuation perspective, seeing some of these companies get knocked down in value. We should celebrate because as investors, you typically want to buy things when they're on sale, right? But you don't want it under the pretenses that the reason why we're getting these deals is because the market is imploding from bad policy decisions. You want it because more people are getting jobs, more people are, companies are growing. Like how celebratory were we all when we saw AI come out 2 years ago and we saw all the possibilities that could have on the future when it came to not just like autonomous cars and medicines and all this other stuff. That hopefulness being drowned out by bad policy decisions like trade barriers. That's the part that probably hurts,
By the way, Mexican president says right now she did not reach a final agreement with President Trump in their call over the weekend.
I think a lot of leaders are coming out and basically they're just saying outright, like, we don't have a deal with the U.S. and we don't have a deal with Trump, because I think a combination of a couple of things. Number one, coming up with a deal with someone who just threatened you, that's asking for your opposition, local opposition, to basically like murder you in the elections, because now it's going to make you look super weak.
Yep.
Right. To saying, look, you basically just caved to the Americans, like you caved to them. So a lot of people are not going to want to immediately make a deal. Contrary to what Trump is saying about, 70 countries have reached out and blah, blah, blah. They've reached out because we are still, king dollar. But that doesn't mean that they're going to politically destroy themselves by getting themselves and their country a really bad deal that's going to cause them economic pain. So I think some of the things that the Trump administration may be asking for, and we don't know what they're asking for, to be honest. I don't think a lot of countries know what they're asking for. Like, how do you ask Cambodia, who's got like a $500 million trade deficit with you? Like, what can the Cambodians give us?
Yeah, it's true. And negotiations are not easy. Like we're acting, and I'm guilty of this as well. I'm acting like, oh, well, we can just get some deals done. It's like, there's a lot of nuances and economic ramifications for countries that have to come up with an entire new trade deal with the United States, assuming the 10% tariff stays as well, because now they have to figure out how they make up for that 10% tariff. This stuff takes time. And a lot of countries, as much as they love us, like Japan's one of our biggest allies, even Japan can't just acquiesce to everything because they have their own sovereignty to watch out for, right?
Yeah, they have their own they have their own electorate, man. Like, you do not want to come off right now as like a vassal of the United States, especially with Donald Trump in like certain things you do behind closed doors, and you don't let people know behind closed doors. And there's other things you could be a lot more upfront about it. Usually the good things you should be upfront about, but the stuff that you really want to be, close. Like, here's an example. If you want to counter China, you don't go out there and say, fuck China. Like, we should all gang up on China. Like, that's not good, because then the Chinese are like, whoa. Like, we know you're coming, America. I'm going to make some policy decisions that are going to not let that strategy work. But if you do it, like, hey, listen, let's wean off of China. Like, listen, I get you this, you get me this. Let's not let China grow any further than it is. Like, I'd call in the Japanese and the South Koreans, be like, look, let's invest in your shipping, because right now China dominates the shipbuilding thing. I want South Korea and Japan to build more ships. So let's get a trade deal together where we share technologies, we share, different things, and let's make it preferable for people to build ships in Japan and South Korea. But this dude just comes out and be like, nah, fuck China. So it's like
it's tough to negotiate like that when you just
it's
a good point. I mean, and look, maybe it's a sign of strength from his perspective, but is China going to blink? And if they don't blink, then it's not really a sign of strength. It's just a sign of, all right, what do we get out of that?
The one thing that I don't think he expected was the Chinese to fight back. I really don't think he thought that was going to happen. Like, I know some people think that this is some kind of 4D chess. I don't think that was in his cards. I think he was going to basically bully China, and China was going to just be like, that's just the Americans being Americans, because that's what they did the first time around. Remember, because the first time they put tariffs on them. I don't think that they realized that the Chinese of of 2000, 17, 18, are not the same Chinese of this time around. They're a lot more prepared to deal with the consequences of tariffs. They're a lot more diversified in the trade that they have with other countries. So they're not wholly dependent on us. And even though their economy is somewhat weak right now, they're willing to tolerate the pain, so it's a very interesting dynamic that we're running into right now, because I think the Trump administration's got to somehow get out of this debacle, without completely like ruining their credibility. And the funny thing is, the longer they let this whole thing happen, the less credibility they have.
Yeah. Yeah, it's just their political capital, dude. I mean, at this point, they've used up all of it on the tariff, which is why, I mean, like, if they had just let a couple rate cuts happen and then maybe start the tariff war, I think that would have made sense. But they went gung-ho.
Or not start the tariff war. Or not, or just do reciprocal tariffs, which is like, hey, you've got this tariff on us, we're gonna have this one on you. That's it. Yeah, and if you wanted to go a little bit further, you go a little bit further. What? Instead of the 4 or 5%, we'll do 10% tariffs. But this dude came out and said 40. And then against China, it's like 150. It's like, come on, guy. Like, you're asking for trouble. I've heard another rumor, which may or may not be true, but it's that Trump is causing this chaos so all his rich buddies can buy up all the stocks on the cheap, and then he'll like fix everything, and basically it'll be like another like wealth transfer kind of like situation.
It would help all of us that bought the dip. So I mean, if he is doing that, then I hope he does it soon. But like,
I don't think that's
Yeah, I think he actually believes in the tariff stuff. It's just he might actually just be straight wrong on this. And given his ego, I don't know if he wants to accept that he's wrong. Last question for you, Kris. Bitcoin. What is your take on this thing going the opposite of the market?
I mean, this basically is showing this disconnect is showing that people are less confident in the US dollar than they are in magic money, which is even worse. Just think about it for 2 seconds. You got this Bitcoin thing, which is just freaking magic money pretty much. And then you've got the US dollar backed by an entire like military and entire economy, and people are like, we don't believe in that. We believe in magic money, So what is that? That's pretty bad. That's pretty bad.
I mean, it is incredible to see Bitcoin gain this type of momentum, and people have been calling on this for years that Bitcoin would decouple, and it's starting to decouple. And it might have. I mean, the tariffs might have been the greatest thing Trump could do to the crypto industry, to be honest.
Yeah, it's kind of sad. To me, it's kind of sad because, like, I mean, United States, we benefit from having a strong dollar. We can buy stuff with that strong dollar, right? But if people are losing faith in the currency and people are looking to other things like gold and Bitcoin, that's bad for us. That means that in the future, if we really need to do anything, like, it's not going to be as easy. I think this is going to sound really bad, but this always reminds me of that dude. What's his name? The African dude who's like, just buy some Bitcoin. And this dude is sitting on YouTube. This guy is sitting on Dubai right now, just chilling. Who would have thought the smartest move was to just buy magic money?
All right, there we go.
Well,
Kris.
Here's a quick question. How are other cryptocurrencies doing compared to Bitcoin?
Well, so that's interesting because I think the whole sector is getting love. So Fartcoin right here is up 9%.
Fartcoin is up?
So the industry is getting momentum. Ethereum, I don't think is Ethereum's up a little bit, but it's nothing close to what Bitcoin's doing. So this is really driven through Bitcoin, and then some of the meme coins are getting some love, but
Okay.
outside of that, it's mainly Bitcoin.
So people have more of a belief in fart coin than the US dollar. Just think about that for 2 seconds, right?
Or Nvidia or Tesla.
That's what Trump has done, baby. He's made, dude, imagine fart coin ends up being like $2 and the US dollar is only $1. I mean, at that point, like, what do we do? It's like, that's what Trump has done. Trump has devalued the dollar to the point fart coin is $2.
S&P 500
All right,
right here,
whatever.
down 2%. Chris, appreciate you. Chris's Twitter right here in the chat. We'll talk to you later.
Take care, guys. Have a good one.
Take care. All right. Volatility continuing to persist, guys. S&P 500 right here down about 2.1%. Even Netflix, it went red. It's green again. I think they deserve to be up 5-6% on the earnings they had. They are not able to hold it right now. Up a little bit right here. Hood's obviously red, down 2%. Even with Bitcoin pumping, they're not able to get momentum as the rest of the market tanks. Bitcoin right here, 88.2. Now, Tesla and Nvidia, my goodness, are they getting smacked? Tesla right here, down 6.8%. And Nvidia basically following up, down about 5.7%. Tesla before earnings tomorrow, obviously very risky. I think a lot of people are getting scared of what earnings will look like. So that's probably why that one's selling off. Nvidia, we had the China news this morning that Nvidia is going to be selling, or Nvidia is not going to be selling chips compared to Huawei. That's going to be coming up with a competitor to the H100. And it seems like they're close to building that competitor. Regardless of if Huawei is going to replace the H100 or not, if Nvidia can't sell into China anymore, it doesn't matter. So I think that's why Nvidia is getting hit. And then as a result, the market falling 2% right here. In terms of the absolute lows of 4,800, we are basically 7% away. 7% away. So we get down another 7%. We'll be back at 4,800 on the S&P, which would be the bottom that we had earlier in the year. Where are the deals? Yeah, so we don't have any announcement on deals yet, at least not today. That Mexico president deal. I mean, look, this is another thing I do think it's important to spend some time on. Like, it's not going to be easy to get these negotiations to wrap up as quickly as even I thought we could get them to wrap up on. Like Japan, South Korea, Mexico, they're just not going to concede to everything we want. And by the way, they have a lot more leverage than us because now they're realizing that, all right, you guys are in a tough situation and you guys need to get deals way more than us. So I think there's one angle where Mexico's like, why should we feel pressure to give you guys any concessions when your guys' economy is the one that's getting hit really badly right now? And that you guys need deals more than us. I mean, if that's the case, then yeah, I think there's an argument where Mexico doesn't feel the pressure. Japan doesn't feel the pressure because they know it's just classic negotiating, right? They know that Trump needs deals way more than they need deals. Their stock market is not the greatest stock market in the world. Ours is. And ours is suffering right now from a lack of rate cuts and a lack of deals. And you either need one of the two to get the market to calm down. We're not going to get the cuts. So it comes down to the deals. Like, really, where is the leverage here? I'm trying to, where exactly is, like, on a macro sense, do we have leverage? Sure, because we're the United States. But maybe we have leverage to get a good deal in a month or two, but to get a good deal by next week, I mean, there's just no country that would feel compelled to give us any concessions that soon. And maybe Bessent pulls it off. Maybe Bessent gets some amazing deals pretty soon, but I think the market is a bit more skeptical around if that'll play out. Trump is not speaking at 10:30. He's doing an Easter egg thing for like the kids. So I don't think he's going to be talking about tariffs at that 10:30, whatever thing that he's doing. But it will be something for Easter. We are going to have another guest on at 10:45. We're going to have one of the former presidents of Tesla, Jon McNeil. He's joining the show today. So he'll be able to talk to us about Tesla as we get into earnings tomorrow. So he'll be on in about 15 minutes and we'll get his take on kind of everything that's going on. But Trump might speak later during the day, but I think right now he's just doing the Easter thing. Robinhood down about 2%, SoFi down 1.4%, Nvidia down 5.5%. continuing the drawdown along with Tesla. Let's do a poll on that. Let's see how many of you guys think we're going to get deals anytime soon. I mean, I'm curious when people think we're going to get that first deal announced, if we get it. Okay, so first big trade deal this week, this month, next month, or 2+ months from now. What do we think? Do we think it happens in April, May, or way beyond May? Still no deal with the Penguins. We need the golden Easter egg to get a deal. Oh my gosh, bro. I don't think it's going to be next year. I think we'll get it done in 2025, I would hope. But I don't think, hopefully it takes until 2026. Nothing happens in the summer. That's a good point, bro. In the summer, you get a lot of things that shut down. So realistically, if we were going to make a deal, it should happen in the next couple months. You start to see a lot of things slow down, especially from Congress in the summer. Why was never not an option? I'm more optimistic to say that we'll get a deal eventually. If we never get a deal, then I mean, like, this doesn't make sense, bro. Like, even if we get a horrible deal, we're going to get a deal. It's just, that's the worst thing about this. If we do get deals done, but the deals suck, and the market's not stupid, they're not just going to be happy we got a deal done. They're going to actually say, what did we get out of this deal? If we don't get anything, I think the market's going to call real BS. And they're going to be like, what was the point of going through all of this? Like, realistically, what did we get? And I'll feel the same. I mean, like, I want real concessions that are strategic enough, and not just one auto manufacturing plant comes back to America. Like, we need some real changes in the global economic order for us to justify the level of wealth destruction that has happened because of tariffs. And I think there's a world in which we can get good deals. I don't think it's going to happen soon at this point. Now it feels like the leverage is starting to wean off, especially with China putting their hat in the mix and basically saying, hey, we're not backing down from the trade war. So Vietnam, if you want to partner with the United States, just know that there's going to be a trade-off for you doing that. And so that just muddies the waters a lot more with trying to figure out what a deal could look like. TLT recovering a little bit right here. So you're seeing the 10-year and 30-year start to get bought up just a smidge. That's what's allowing TLT to get a little bit of momentum. Tesla still down basically 7%. Bitcoin up about 2%. And then Nvidia still down 5% on the day. Rocket Lab's at 18. This thing was at 21 last week. This one's down 1897, about 4% on the day. 35% of you said 2 months from now, you believe we're going to get our first big trade deal. That would put us into June at that point. That will put us into June. What does a good deal look like? Honestly, I think a good deal simply looks like the 10% tariff going to zero. I think the United States has to bring that to zero or close to zero, maybe 2%, 3% max. So that 10% has to go down. And then B, it has to be the other country substantially increasing their amount of imports from the United States. So if a country is doing 500 million in imports, let's say they promise to do 2 billion in imports. So they 4x the amount they're importing from the United States. But they're going to want something. And I think what they're going to want are the tariffs to be gone. So I think that's what a deal looks like. We get rid of the tariffs. That helps get rid of inflation. And we either decrease the deficit or we turn the deficit into a surplus. There's probably some more nuances to that. But that, I think, is what every country wants. They want the tariffs to go down. We want them to be buying more from the United States. If we can get a deal like that done with a lot of bigger countries, I think that's what the street's looking for. But and the question is when that ends up playing out, or if that happens. Trump paused tariffs in April for 90 days. What if he's trying to get deals made to claim victory by July 4th? That is not a crazy theory. Independence Day claiming we got a bunch of deals done definitely sounds more like a Trump type of move. Could he pull that off? I mean, maybe all the deals get done in June. They announce them in July. The question is just where the market's at that point if we end up waiting another 3 months from here.
$1,000. We'll also talk with Oppenheimer analyst. Jason, did that give you any pause in terms of having a buy in the stock at these levels?
Several things. Number one, we think on the out year, that 2030, kind of where we think it plays out, you're actually paying more like 20 times earnings discounted back at a 7% discount rate. So you have that. Look, we've clearly seen what the market will pay for, their beloved stocks, and obviously,
So they're talking about Netflix right here. The interesting thing about Netflix and paying this type of momentum or paying this type of multiple right here is it seems like the whole recession-proof narrative continues to gain leverage in the context of Netflix. Again, we're going to have to see until, we have a recession, if it is recession-proof. But that is why some of these firms like Oppenheimer, JP Morgan, et cetera, have upgraded Netflix to a buy today. Netflix right here, $9.78 currently right now. Here is Doug Clinton in the context of Nvidia continuing to be their biggest AI pick, even with the China volatility. It seems like you do have some firms that remain bullish on the AI CapEx story, even if the tariffs are going to start hampering the amount of spend.
Up these tech companies, you got the Nvidia story, you got the Apple story. Is there any tech you like right now?
Andrew, it feels like nothing can really go right for big tech right now. It's all going against them all year. That's been the case. But in terms of big tech, what we like at Intelligent Alpha, where we do use AI to do our portfolio creation, Nvidia is still our top AI pick. And I know that is probably at this point exhausting to hear. The stock has not worked this year. It really hasn't worked the last 6 months. But I think if you look at the bottom line, 21 times forward earnings, I think those earnings are pretty solid. We've de-risked the China issue now with the H20 ban. And I don't think that the hyperscalers, no matter what happens in the economy, are going to stop spending on Nvidia chips. So that is still the name that our models are sticking with.
And you still think that Nvidia, one of the things, though, that we've been talking about for months now, by the way, including Andy Jassy, who was on the broadcast just last week, talking about how ultimately the price of these chips has to come down. Like, this whole thing doesn't really work unless the price comes down. And who would eat that price? Nvidia more than anybody else.
I think you'll see over time, and this happens always in tech, right? Prices come down and the ability of whether it's software or hardware improves over time. That's the story of technology. But I think the other side of the AI bull market is really, what is the consumer side? What is the enterprise side for demand for these products? And what we're seeing over the last 3 months, and I don't think this is being reflected in stocks at all, is that there is huge demand for these products. And I think it's increasing and even accelerating with the O3 model launched last week from OpenAI. You have Grok from xAI. You have Gemini's new model from Google. All three of them have said they have capacity constraints in terms of what they can serve to customers right now. I think the demand will be there to force more chip buying, even if prices do come down.
Is there anybody you like? So you like Nvidia a little bit, but what about, where do you land on Apple, for example?
We don't own Apple. So Nvidia is actually the only mega cap tech stock that we own in our Livermore ETF LIVR. And earlier this year, our AI models that do the picking for that portfolio shifted out of big tech except for Nvidia. And ironically, about 2 weeks ago, the biggest contrarian bet the models want to make is into gold. And so what we have right now in our model is sort of this barbell approach where we have AI stocks like Nvidia, we have Micron, TSM, and then we have a pretty heavy position in gold and gold miners. And so that's kind of how AI is viewing the world right now in terms of managing the risk and opportunity in the markets.
What would you tell the investor class that's sitting here watching us, saying that owns an Apple, that owns an Alphabet, that owns a Meta? Would you say you don't want to be owning these things at all? If you were a hedge fund, would you be shorting these things?
I wouldn't short them at all, no. I think if I owned them, and I do own some of those stocks personally, I would say you hold on to them. And the way that we saw this kind of play out in 2023, I'll go rewind 2 years ago when we started thinking there could be a recession. In fact, I think it was consensus we would get a recession in 23. One of the plays that point in time was you just own the mega cap tech stocks because they're offensive and defensive at the same time. They have the upside of AI, and they have really strong balance sheets and products that consumers can't live without. If you did get the recession, that narrative might be relevant again here. If we do go into recessionary times, I think the big cap tech stocks are good to own.
I mean, I don't disagree. Big tech stocks are obviously the best stocks in terms of the best businesses, I should say, not necessarily the best stocks, but those stocks I think can weather the storm. It's just this year they haven't worked. And Nvidia in particular hasn't worked at all. Nvidia right here down about 5%, rebounding a little bit from that 95 level, now back to 96.4. Tesla as well, 226, up from 223, but still down aggressively on the day. Palantir down about 0.3, relatively flat. S&P was down 2. Now it's down 1.85%. It does seem like that Trump tweet that we just looked at, or that came out like, what is it, an hour ago, is him trying to blame J Powell. Does anyone get that vibe as well from what's going on? Like, I think there's two worlds. I think he either crashes everything and he blames J Powell, or he fires him. Like, it's hard to say that he's not going to get it or start thinking seriously about the prospects of firing him, which I wonder how Besant and Lutnick are going to react to that. I mean, they're going to have to defend it unless they publicly disavow it. And if they do, then we really start to get into a movie. Because if Besant and Lutnick have not fundamentally disagreed with Trump publicly yet, they've been defending him, having his back, all that stuff. If they actually come out and say, hey, we think this was the wrong move, they probably get fired too. I mean, at that point, like, I think Trump would just get rid of all of them. So it seems pretty obvious he's trying to put the blame on J Powell here. And if J Powell doesn't acquiesce, he might seriously try to fire him. Now, if he actually goes through with it, by the way, the probabilities for a Fed rate cut in May are only 11%. So it's not like we're going to likely see a cut anytime soon. June is a bit more likely. But if we don't get that cut in May, Trump might end up consulting with his legal team and going for it. I just think it would be a dramatic move for him to actually go that far and cut and fire him. And there is precedent for him to fire him. You can fire a sitting official. You just need to have a lot of legal arguments. I mean, it would go to the courts, essentially. We would be in a Supreme Court battle for if Trump could do this. And if he loses in the courts, I mean, A, that's just going to look really bad for the entire economy. B, if he doesn't, respect the courts and still fires him, that's going to be even worse. So it can get really messy in terms of how this plays out, which is why I think he's not actually going to try to fire the guy. It's just too much stress to be able to go that route. But he's obviously trying to put a lot of public pressure on him right now. 88.1 on Bitcoin. That one's still holding up on the day. It was at 88.5. Currently still above 88,000 here right now. The day he tries to fire him, the economy will be done. I do think the market would fall 5% that day. Like, I think easily the markets would fall. And I hope I'm wrong, but I just think a lot of confidence would get shaked out if he does. Like, a lot of market participants don't like the Fed. A lot of hedge funds probably don't like the Fed, all that stuff, but they would hate more a president unilaterally getting rid of the Fed chair versus the Fed making a bad decision. I think it would be a pretty tough move. Why don't you invest in healthcare, biotech? I'm not an expert in those areas. Really hard to understand how healthcare and biotech work. Also, in this environment, like XBI is the biotech ETF. How's that one done year to date? I just feel like when you have a lot of volatility, investing in biotech is not the easiest. Yeah, that's down 15% year to date. Yeah, it's just a lot of these companies fail if their drugs don't work. So they need their drugs to work. And in this environment with the vaults, also we have pharma tariffs coming up soon, is what Trump said last week. I mean, that just creates even more issues. Some genomic names have done well though, but a lot of them have had a tough year as well. UPXI is up 600%. I have no idea what that is. UPXI. Okay, this is a small cap. It's $21 million. This is, yeah, I would stay away from this one. It looks like a Chinese company. UPXI, Upexi. I have no idea why that's up. It's not a new IPO. Oh, they got $100 million. Oh, it's a crypto company. Huh. They just got $100 million investment from some crypto VCs. Wait, is it a crypto company? They got 100 million. Oh, wow, they're opening a Solana treasury. So, you know, like the Bitcoin treasury, they're doing a Solana treasury. Yeah, it's a crypto. But they also sell medicinal mushroom products. What? This thing looks crazy. A crypto company that sells medicinal mushroom products. Well, there you go. That's what you got in the context of UPEX. And the fact that money, again, is rotating to some of these names and leaving big tech, obviously, you've got people that are getting super speculative, and they're choosing to find different avenues of trading materials. S&P 500 right here, slowed down about 2%. Tesla down about 7% on the day. And then Nvidia right here, down about 5.4%. All right, let's bring on a special guest we have on the show today. I told you guys he was going to be on at around 10:45. This is a guest I've been looking forward to talking to, as he previously has worked at Tesla. So we'll try to get some understanding of how he currently thinks about the company. But he's also worked at other places like Lyft and has a nice track record in the corporate world. So I'm happy to bring on to the show Mr. Jon McNeil. Jon, thanks for being here.
You bet, Amit. Nice to be here.
Nice to meet you. So you serve as the CEO and co-founder of a venture studio, DVX Ventures, Vista Shares. You've had a long history in the corporate world. I think the audience would love to get some insights from you. First of all, just to give a little brief introduction of yourself, and then we'll get into some thoughts on Tesla.
Sure. My career has been kind of banded by two ends, both early stage and late stage. So I started 6 companies from our kitchen table, scaled them, sold them to public companies, and then have also been at large scaled public companies, as you mentioned, like Tesla and Lyft, and I'm on the board at General Motors and Lululemon.
Very, very cool. You were the president of Tesla, global sales, marketing, and government relations from 2015 to 2018. So I guess my first question here is, what was that like working at Tesla back before it became the Tesla that we have today?
Well, it was pretty incredible. We only had one model when I joined, which was the Model S, and then we introduced the X and the 3, and then eventually the Y. So it's been pretty incredible watching Tesla's journey since 2015. It began as an electric car company, as you know, and now it's evolving into something much bigger, pioneering in AI and robotics. And I think what fascinates me today is seeing how Tesla weaves AI into everything they do, from cars learning to drive themselves to the smart systems in their factories, and even how they handle customer service calls. And so watching companies like Tesla and Nvidia spark something at DVX Ventures, we call them super cycles. These aren't just regular tech trends, but they're game-changing waves that shake up just about everything about how we live and work. And we're in the midst of several super cycles right now. We're in a robotic super cycle, an electrification super cycle, and clearly an AI super cycle. And investors in public markets want exposure to these super cycles for obvious reasons, but they haven't historically been able to access those. They haven't been well served by typical thematic ETFs, which are too often marked by overconcentration in the big names tied to a particular trend. And take EVs as an example of that. There are a bunch of ETFs that include charging networks or car manufacturers, the brands that we all think about when we think of EVs, but very few include things like the battery supply chain, the steering systems, et cetera. So basically everybody overlooks the not so sexy parts of the supply chain and end up only investing in the shinier, better known end producers. But in reality, in most super cycles, the supply chain makes the majority of the profit pool. And at the end, the producer makes a fraction of the profit pool compared to the supply chain. So the transformation that inspired us to do what we're doing at Vista Shares with our AIS fund is we're focused on the companies that build the backbone of what makes all this AI possible. The data centers, the chips, the equipment, the cooling, the fiber, that everybody from Tesla to governments worldwide are pouring their money into.
Do you think this AI robotics trend that we're seeing right now, do you think that's going to be a super cycle that is going to, I guess the question I'm trying to say is, when people say Tesla's more than a car company, do you agree with that, given the pivot into FSD and Optimus?
Yeah, I think any car company that is now kind of embarking on this, but Tesla's clearly a few steps further down the road, is becoming more of a software and AI company. All car manufacturers are going to need an answer for autonomy. If they don't, I don't think they're going to exist. And so, yes, I do think we're in the middle of a super cycle that is just beginning. The internet super cycle started in the mid 90s, and 30 years later, we're still going. And I think we're probably going to experience a typical or a similar multi-decade expansion into AI and robotics.
Do you think robotaxi is the future for Tesla?
Well, they've applied for a ride-hailing permit in California, something they've talked about doing for a while, and that move puts it in direct competition with Uber, Lyft, and Waymo. But for now, all they've done is taken that first regulatory step. And this is going to be pretty fascinating to watch because the economics of this are in question. As the information reported last week, most of the management team at Tesla said, we don't think this is a business that's as big as maybe it's projected to be.
Right.
And I think, Tesla right now has a level 2 system, which is hands off but eyes on. And Waymo's got a level 4 system, which is no driver. And there's a lot of catching up to do. And some people have projected, well, this is a data game. And I would say, yeah, to use the car analogy, data is the fuel, but the engine is the AI machine that translates that data into action for the car. And right now, Tesla, although they have massive amounts of data, their engine hasn't proven to be as effective as Waymo's.
Okay, and then Optimus, I know that one's a little bit more unknown. We obviously don't have a ton of progress on that yet, even though Elon thinks that they can get up to like 500,000 robots in the next couple of years. Do you also feel as confident about that as you are about the robotaxi side of the business?
I think one of the interesting things that's happening now is China's ahead in several markets, and they're ahead in autonomy, and they're ahead in robotics in terms of humanoid robots. And so I think you can look to them to see how many humanoid robots they're already producing. They had a race over the weekend in China where there was a half marathon run between humans and robots. The humans won this time, but the robots improve every cycle. And what that underscores is the amount of investment that the Chinese government is putting into robotics. The challenge in robotics is similar to autonomous cars in that it is all limited by the AI capabilities. And that swings back and forth between the constraints on the chip, how fast can the chips process the information that is in front of the robot, and at the other end of the pendulum swing is how fast the software and how accurately the software can respond to that. And right now we've got on the robotic side a lot of software challenges. When you teach a robot, for instance, to fold a t-shirt, the background that robot is looking at, say out a window, is non-trainable, meaning that if that background changes, the weather changes, the lighting changes, the model has to go back and retrain itself in many instances. That is obviously not viable for the long run. And so we've got a lot of work to do on the software side. But I think the future is kind of unquestionable that there's going to be strong demand for these. The real question for investors is going to be around timing.
Yeah, I agree. And as everyone can see on the screen right here, obviously robots in China are starting to pick up a lot more momentum. We don't have robots in our day-to-day lives in the US yet because there's not many companies building them. But in China, I mean, there's just thousands of companies taking a stab at it. All right, last question for you, Jon. Thank you for joining the show. What are your thoughts on Elon as a leader, given the time you spent at Tesla?
Obviously, he's got a very unique leadership style. I would say when you work closely with him, you see two things. He's very focused. At the same time, he's very funny. Maybe one of the funniest individuals I've ever worked with. He moves on his convictions, and a lot of times those convictions are right, but it's hard to move him off of his convictions. In terms of the team around him, more often than not, he's been right. But there are times when he's been wrong. And even though on style and compassion, we differ significantly, I really enjoyed working with him. and alongside him, because he's a very, very unique individual, and I think a very special individual in terms of his inventiveness.
Yeah, I agree. And obviously he has taken a much more political route, but
Right.
that political route is probably due to his convictions, as you says, when he has an
That's
idea,
right.
he doesn't stray away from it. So
That's right.
there you go. Jon McNeil, thank you. Vista Shares, appreciate it. I'll put your links in the description, and we'll talk to you next time.
Thanks, Javi.
Thank you, John. Appreciate it.
Bye.
All right, market's still tanking regardless of anything else going on today. Rocket Lab right here down 4%, Nvidia down 5.3%, Tesla down 7%. Nothing's really coming into, I mean, no one's really coming in to buy the dip, or we're not seeing any algorithmic moves to the upside from bounces. Like if we see a bounce, it gets hit as soon as we get the bounce. Like the S&P, we bounced down to 1.8% down. Now it's down another 40 basis points, 2.26. Pound here was down about 0.3. Now it's down 1.92. Netflix, is Netflix red yet? Netflix is kind of holding on. It's a little bit more resilient than most, going green. But Tesla and Nvidia leading the way, down 5% right here. It is ugly. It is very ugly. Who's buying? As Christina says right here. Who's buying? What are people doing? Are you buying? Are you selling? We're taking advantage of the dip. Are you selling into strength? It's not even a great day to sell covered calls either, because the premiums must be disgusting across a lot of these names. I think I'm just holding, bro. I don't feel that's the other thing about the market, right? I don't feel any pressure to do anything. Like, this is not one of those markets where it's like, oh my God, the dip, you got to buy. It's like, it's one of those things where it's like, all right, you do your weekly DCA, monthly DCA, whatever you want to do, and then hope something changes in the macro. Like, I think I'm in the market enough at this point to be like, all right, if Trump pivots, it'll be great. If he doesn't pivot, then cool. We just keep waiting to see how this all plays out. Arwin says he picked up more Rocket Lab. Nick's buying some GameStop. Matt's buying Broadcom. Bagusto bought Amazon, Nvidia. Selling puts. Today's not a horrible day. Sell some puts. Obviously, selling puts will give some higher premiums than not. Paying off some debt. Yeah, that's not... If you don't want to invest in the market, might as well pay off some debt, right? Small DCAs into the Mag 7. Why is Bitcoin up so much? Again, I think it's decoupling a little bit from traditional metrics. Obviously, M2 supply is going up. That's helping Bitcoin, but the real reason is people are afraid of everything else, and they're fleeing into Bitcoin and gold right now. At least that's what it feels like. Are you buying AMD? I'm not buying AMD. I would personally just buy more Nvidia if I would buy anything. But AMD as well, you know, if you believe in the overall chip thesis in the next 5 years, I can't imagine AMD is going to be as worse as it is today. Same thing with Nvidia. Like, I feel all of them will move together, but we need a lot of this China stuff to be resolved. S&P 500 right here, down about 2.24. Adobe down 1.9. And Pound here now down 1.47. You know, speaking of ELF, Steve was looking at that ELF over the weekend. I see a couple of you guys mentioning ELF, and he was looking at it a bit more seriously. I guess not only in the context of numbers, but also this whole makeup recession thesis. I don't know if I'm fully convinced by it, but it is one of those names that he's taken a different look at. ELF right here down 2% on the day. Ulta, I think, is also down. Ulta's actually up. Okay, so Ulta's going the opposite of ELF. ELF's growth is still really good. It's just slowing down from where it was before. Like, they were growing like crazy. Now they're still growing really well, but it's not as much. And I think that's why ELF got hit. Nike, dude. I would want to see Nike's earnings. Like, that's what I'd be most curious about. Because last time they had a good earnings because the expectations were so low. Now, if they have a good earnings, you can actually give Nike some credit in the midst of all this volatility. But the China exposure is still heavy, and they also have a ton of Vietnam exposure that now is getting the crap tariffed out of it. So it's not like that's the necessarily easiest situation to resolve as well.
Let's get a little bit of an update from here, and then we'll keep going and see what else we got going on. Yeah, the Dow Jones down 800 points. That one's definitely getting hit a little worse than the S&P right now.
Discretionary and tech are getting hit the hardest. The NASDAQ, as you can see, down 2.5%. Tesla, ahead of results, is down sharply. Nvidia, Microsoft, all these tech names are struggling today. And the chatter heats up around Fed Chair Powell and attacks from the president. We'll start there. Our next guest is reiterating his preference for U.S. assets despite the turbulence and says the markets will move higher from here. Joining us now is Wells Fargo Investment Institute Senior Global Market Strategist Scott Wren. Scott, you're not spooked by these comments about Powell from the president this morning? I think that has the market a little on edge.
Yeah, I think it does, Sarah. And, there's a lot of things for strategists to be a little nervous about. But I think that, really presidents, Democratic or Republican, they want lower interest rates. That's usually better for the economy. The thing is, President Trump talks about it and talks about the Fed chair. So certainly that's been an issue. But the Fed's in a tough spot because the unemployment rate's low, inflation's higher than where they want it. So it's really tough we think they're going to cut 3 times this year, but it's tough. Like let's say at the May meeting or something to say we're going to cut rates. So that is certainly making the market nervous.
Yeah, and there's also this idea that, we've seen this president push the power of the executive branch. And will he challenge, even if it doesn't appear to be legal and that Congress has oversight on the Fed, will he actually challenge it? And if so, what would that mean for U.S. assets, U.S. stocks?
Yeah, I think, Sarah, right now, you're seeing things like the 10-year Treasury yield a little bit higher. You're seeing stocks obviously quite a bit lower. You've seen IFA outperform relative to the U.S. But, for us, the U.S., they're really leading the globe into what we think is probably a quarter or two slowdown here. But they'll probably lead out as the U.S. typically does. So I think right now, we don't want to get defensive. Clearly the defensive sectors have outperformed. We're not interested in emerging markets or developed international. We think they're way ahead of themselves. So for us, we want to take advantage of these lower U.S. stock prices. We want to step into the S&P 500. We want to step into U.S. mid caps. And, really, Sarah, for us, retail clients are our bread and butter here at Wells Fargo Investment Institute. And, we want our clients to do what's really tough for them, which is the market's down, they're nervous, their friends are nervous. We want them to step in and buy stocks here if they have any kind of a long-term view at all. The U.S. economy is going to continue to grow. The global economy is going to continue to grow. And just like decades past, there's bumps in the road. But if you've got that longer-term outlook, you need to step in when stocks are down and you're nervous.
Although, Scott, we've been paying a lot of attention to positioning lately, and retail has not degrossed the way institutions or hedge funds have. Are you saying that you've noticed an explainable decrease in sentiment among retail investors?
Well, Carl, I think that retail investors, and this really has been the case for quite a while, there's more cash in retail investors' accounts than we would recommend they have. And I think that cash, they intend to put that into the stock market. And this is retail investors in general, not just the ones that are our clients. But they're hesitant to because of all the uncertainty. It was COVID. Now it's an administration that's moving through some priorities pretty quickly. And so typically, retail investors, they can find a lot of excuses why not to get into stocks. But once again, if you've got a long-term view, we don't want to be defensive here. We want to look at things like energy and financials and technology and communication services. And those have really been some of the underperformers so far. So we want to try to look ahead. Second half of the year and into 2026 is going to be better. We want to be more cyclical. And so that's what we're trying to do. We're trying to step in. We moved money about 3 weeks ago from bonds into stocks. I think that's probably the way to go.
You like U.S. relative to international, and I wonder, is that a tariff story? Do you think that they get hurt ultimately?
All right, Trump is live. I'll switch over to him for a second. Again, I think he's talking about Easter, so nothing too crazy, but let's flip over to him right now.
Buddy. And now we're setting records. That's sort of testament to what's happening in terms of the spirit of our country. We love our country. and it's been something very, very special. And speaking of special, Easter is special, and it's one of our favorite days. It's one of our favorite periods of time. We're honoring Jesus Christ, and we're going to honor Jesus Christ very powerfully throughout our lives, all throughout our lives, not just now, all throughout our lives. We're bringing religion back in America. We're bringing a lot of things back, but religion is coming back to America. That's why you see the kind of numbers that you're seeing, the spirit and the kind of numbers that you're seeing. So we're going to come down and join you right now. But I just want to wish everybody once again, happy Easter and enjoy your lives. We're going to have a great 4 years. Thank you very much, everybody. Thank you.
Okay, cool. So that was it. Literally, it was like a 30-second announcement. So it wasn't a super long speech. We got in like right when he was starting. So yeah, that was the Trump announcement. I don't know if we're gonna get any other live streams today from him, but he is optimistic that the next 4 years will be good. In terms of what the guest was just saying on CNBC around buying the dip, look, he's not wrong. I mean, obviously, you buy the dip on names that get hit badly, and you buy them for the long term. I think the broader problem here is not about buying the dip or not. It's more so a question of what is the solution to the current state of volatility, and there might not be a solution, which is why buying the dip is the only good answer that people kind of have right now, which I would agree with. And it's basically what I've been doing over the past couple months. But at some point, people do also want to know, hey, is there an end in sight to this? And it just might not be soon, might not be this year. I'm hoping it would be in the next few months. But if it's not, it's not. And I guess you would just have to trust that stocks at the end of the day are going to be a better bet than bonds over the next 5 years. But the astronomical 2024 type of gains, just might not easily be replicated in 2025. And Lutnick was in the rabbit costume. Oh my gosh. Oh boy. Look, at the end of the day, for those that think we're going to have 4 years of a bad economy, I do think that Trump would want to protect his reputation from a recession. I think. That's my thought. My thought is Trump would want to protect from a recession, protect from getting destroyed in the midterms. Maybe he doesn't, but I would hope that that is somewhat of a Trump put on this market. Just not sure if it's actually going to play out that way. Dude, every time you call him Nutlick, I have to change it to Lutnick, but you guys have been saying that for the past 2 months at this point. And I almost say that every time. Trump needs to win the midterms. Yeah, I mean, dude, as of now, the midterms are obviously not going to be easy. I mean, his approval numbers are starting to decline, but they're still pretty high up there. It's not like his approval numbers have reached like anywhere near Biden numbers back in September. So like his numbers are still pretty damn strong. It's just a question of at what point is there enough economic pain that hits Main Street, which we haven't seen it in the job losses yet because of these tariffs. And maybe we do see that. Maybe he stops it before that happens. But we haven't seen enough of that yet for, I think, people to really start turning on him. Like if you've been MAGA faithful, you're probably still going to be MAGA faithful. If they start turning on him, AKA, people who are part of his base start losing their jobs, that's when things get bad. We're not there yet. And I think he knows that there is a margin of safety before we get there. If he lets it get there, then, I mean, yeah, that's obviously when approval numbers can take a much worse hit than where they are right now. And maybe that's why he's positioning the recession blame on Powell, but I don't know if he's going to easily be able to do that. Are you buying? And if so, what? I'm not buying anything today. I have no desire to buy anything. I have zero desire. I want to see what goes on in the bond market. I want to see how this whole Trump Powell drama plays out. Like the 10-year and 30-year getting back to levels where they were at 2 weeks ago is not encouraging. And it's weird, more so than anything. So I've been buying the dip all year. I think if you want to buy the dip, you buy the dip. But I am just curious to see how do they end up resolving what's going on in the credit markets? Because obviously right now it's not in the best situation. And it can get worse. But in the midst of it getting worse, some of these stocks continue to feel undervalued. Meta is a name that I really wanted to buy. And as much as I want to, begin at 485 right here, I want to see earnings now. Like now I'm becoming more conservative as an investor if I'm initiating a new position, because I'm like, all right, what are they going to guide for? What are they going to give us that is more exciting? And one of the reasons Netflix has been pitched as more defensive than the big tech companies is that it's a subscription that's not going to be canceled. Ad budgets on Meta could get easily reduced, and Meta can do nothing about it. Like Meta grows through ads. That's it. They only grow through ads. So realistically, if ad budgets come down, they're going to have to guide lower, and we might just get a much better price on Meta at that point, which I would be a buyer of if it happens. Also, the antitrust lawsuit, yeah, that's a nasty headwind that it has to. And I didn't even know when it was at 740 this year. Like I didn't know they had some big FTC trial coming up, but apparently they did. And that 740 obviously was incredibly unsustainable. 740.25 back in February. Like I don't think the market would have let it get there if they knew that Zucks was going to be under investigation for the next couple months. But I love the business. I've wanted to be in Meta for a long time. It just feels like the headwinds are there. Same thing with Google. I already own Google, but like to DCA into Google right now means you have to ignore the UK lawsuit. You have to ignore the United States lawsuit. You have to ignore the fact that ad spending could come down. Like you just have to ignore everything and buy it. And if you're doing it for the long term, sure, you ignore those things. But if you're expecting a reversal to like 160 or something, it's just tough with a lot of the headwinds we're seeing. Where's HIMS today? How's HIMS doing? HIMS. Yeah, that's down 6%. And then Amazon's really getting hit. A lot of people have been asking about Amazon. I think it's cheap on a lot of metrics. The problem is tariffs uniquely affect Amazon. And if they guide for a downturn, which I think is inevitable at this point because the China trade war is not coming to an end. That's 145% tariffs on every product they sell outside of electronics. Like that's going to be a headwind. There's no way to go against it. And then if AWS gets a headwind, which the only way that would happen is if a CapEx slows down a little bit. I don't see that dramatically affecting Amazon, but if it does, I mean, that's just a recipe for disaster for Amazon. So again, all these questions I feel like can easily be resolved on earnings. And buying into those earnings is just taking a little bit more risk than you might need to. Did Trump tweet again? Did we get another Trump tweet? No, we did not. Last tweet was the interest rates tweet. When does the 3-month pause happen? It's already in effect. I believe it ends in July. So around July. Okay, I think he did tweet, but I don't see it on Truth Social. Let me see if I can get it from somewhere else. Oh, yeah. Dude, is he talking to reporters right now? Where are we getting these quotes? I think he left the Easter Bunny thing and then like he went to go talk to reporters. All right, so he said two things. He says, number one, the economy has been good. Energy is down. Number two, he said the EU has been fine. I guess he's trying to say negotiations with the EU is fine. The economy has been good. Energy is down. Well, he's right about that. Oil prices are down, but the markets obviously have not been the best. Tesla right here, still down 7% on the day, and Nvidia down 5.2. It's been a couple hours. Markets have not been able to get excited about either of those names. Economy has been good. Energy is down. That is the quote. All right. That's what we got from Trump. Eric, thank you for the $10 super chat. Appreciate it, brother. This too will pass. I am buying, baby. Can't blame you. I cannot blame anyone who is buying. I mean, I bought on Friday, so or Thursday, whatever it was. I think it's a market you buy with the expectation of not knowing when you're going to get a return and expecting the return to happen years from now. The reversal should happen, I would imagine, months from now, and not a crazy reversal, but somewhat a reversal, but like real returns, which is, what investors do. They buy for the long term. So I don't blame anyone at all getting in on some of these prices. If we revisit 4,800, it would be funny to me because it means like nothing has changed in terms of when we first visited 4,800 on April 8th or April 2nd from the tariff stuff. But eventually you've got to imagine either that's a double bottom or the bottom falling out and we're going below 4,800, which would be below 2022 levels, which would just be insanity at that point. I can't imagine the earnings growth is that strong and stock market performance is that bad. I wonder what happened to bond yields too if that plays out. So I feel like this is a market you buy, but with the expectation that it definitely can head lower. All right, cool. I think that's it for us today. Let's do word of the day, then we'll be back at 3:45. I don't think we have any big earnings today. Yeah, there's nothing today. So tomorrow's going to be a big day. Tomorrow we got a lot. I got a bunch of people that'll be joining me for Tesla earnings. That's going to be an important one. We got Verizon, GE, Moody's, and 3M in the morning tomorrow, around with Lockheed. And then in the afternoon, you have Tesla, Capital One, SAP, Intuitive Surgical, Enphase, and Chubb. So you have insurance, you have finances, you have SaaS, you have solar, you have tech, and then you have big tech with Tesla. So it is going to be a big day tomorrow and obviously a very volatile day. Wow, look at the VIX up 14% on the day. VIX was at 50 a couple of weeks ago. Scott Bessent said it peaked. Currently VIX up 14%, 33.92. Word of the day is warren.
Warren.
A place where rabbits live. A rabbit bolted from the underbrush and vanished into the safety of its warren. The fox waited patiently outside the warren, hoping for an easy meal. I did not know warren was... I've heard this as like someone's name. I've never known... Did anyone know that it's defined as a place where rabbits live? I always just thought it was a name. Yeah, Warren Buffett. Huh. Interesting. A place where rabbits live. Some of you said you knew that. I did not know that. Oh, not at all. All right. There we go. That's it for me. Thank you, everybody, for being here. That earnings website right here, I'll put it in the chat, earningshub.com. It's a good website that I use to track all the earnings. So if anyone wants to check it out, you can check it out there. Yeah, that's it. I'll be back on the market close. We'll see how this plays out. I imagine Trump is going to give us some more stuff today after he gave us that JPAL tweet a couple hours ago. And we will see what happens to bond yields and the overall markets. Right now, it's down pretty aggressively, 2% on the day. Tesla down 7%. Nvidia down 5%. We'll see how this turns out near the end of the day. All right. Thank you, everybody. Appreciate it. We'll be back at 3:45 on the market close. Bye, everyone.